for you guys. So, uh, currently waiting for my friend to join us here. I got about four folks that I was anticipating bringing onto the stream for us to interview, really just find out about how they're beginning their journeys and what their goals are. But in the meantime, just wanted to give ourselves a little bit of an intro while we potentially are waiting for some more people to join us, and also the folks that I was planning on having on to join us. So I think what ends up happening to a lot of folks these days is what ends up happening to a lot of these folks these days is folks are really wanting to get into investing, but I think what ends up happening is there's a mental barrier and a mental block that people put in their minds because of the uncertainty around investing. And I think what ends up happening is they see that there's barriers to enter financially, there's barriers to enter in terms of time commitment, and I think what ends up happening is they're not provided the appropriate education on really setting themselves up, understanding where they want to be in their financial careers. And they hear things from the news, and they hear things from reading stuff online. And I think what ends up happening is they really just get education paralysis about what all this information is. And that, paired with their financial miseducation or their lack of education in finance as a whole, draws them to just be petrified, whether it's investing in real estate, whether it's investing in something as simple as the stock market, whether it's investing in something like cryptocurrencies. I think it's honestly just because there's so much information out there, it's very difficult. And even in the community that we have, the miseducation that some folks have promoting on YouTube or just promoting in general, I think a lot of the folks that are even in this stream do a very good job, but there are some folks on here that I watch and I'm just curious. They're more, and I think what ends up happening a lot of times is they're really just getting started in their career, just as I am, and they're documenting. And because they end up getting a following, they have very good production quality in their videos. They have a decent amount of idea. Just because they've made that first initial step, people are immediately drawn to them. And sometimes that ends up going down an inappropriate path. But regardless, really just wanted to open up with that and really just try to do something a little bit new. The hope is to get a few people, regular folks that aren't necessarily YouTubers like you and myself. A lot of the folks that are in here are generally speaking YouTube influencers as well, or YouTube creators as well. So I really want to take time to get some more of the folks that we don't normally hear from, like random people that are just getting started in their careers in investing. I talk to people every day. More and more people in my personal life find out that I'm creating YouTube videos, and they're very intrigued by it. And I end up hitting this barrier all the time. And I know I'm kind of speaking in circles, but I have people who are like, oh, you need to teach me this, you need to teach me that. So I won't push too much, but what ends up happening is I'll send them an article, and when they see me the next time, I don't ask about it, but they'll say, oh, I know you sent me that article, I haven't read it yet. And I'm like, okay, well, no problem. The first time I'd sent somebody an article, I would say it was probably like 4 or 5 years ago. And I was super excited, right? I think everyone's super excited about getting their investment journey started. They want to talk about it. It's something that they're passionate about. And that's generally speaking why a lot of these folks here on the channel continue to be in the live streams, and they continue to obviously create YouTube videos because they're very passionate about it, and you have to be very passionate to continue to create YouTube content. But what ended up happening, and I feel like a lot of people can probably relate to this in the stream, is would ask that person the next day, did you read it? I want to talk about it. I sent you the article because it really helped me. I really want to talk about it with you. And eventually they got to the point where they're like, I'm not going to read it. Like I was just being nice. And so now, learning that lesson, I'm very cautious about who I really jump the gun and try to talk to people about investing with. I'll acknowledge that, I personally believe myself as an investor first, and a businessman and engineer second and third. And if they're interested in talking about investing, I'll let them kind of come to me after I say, hey, yeah, I have a channel. Yeah, I talk about it. And if they want to continue about it and they're really interested, I'll let them come to me. But a lot of times what ends up happening is they'll mention in passing, oh, you really need to help me. And I'm like, I'm available to talk anytime. Whether it's at work, whether it's, personal time, more than happy to educate or provide any, not education, but rather provide any experience that I've had that might help people get themselves into an investing career path. But what ends up happening most of the time is they just, don't ever want to get past that. They just want to talk about, I need to do this, I need to do this, I need to do this, but they never end up getting in the mindset of actually investing. And so, unfortunately, a lot of people, including people I know in my own family, are going to end up sticking in that situation forever. They're willing to talk to themselves about they need to do this, they need to do this, but then at the end of the day, unfortunately, they don't end up having the wherewithal to really do anything about it. They just keep talking about it. So, but yeah, that's relatively it about the intro. Was really hoping that my first gentleman would join us here. It looks unfortunately like he stood us up here, but more than happy to continue the live stream as expected. So if anybody has any questions in the live stream, more than happy to talk about it. I unfortunately don't speak Spanish, but if we get this, I'll tell you one thing. While we're waiting for some of the other folks, I'm kind of staggered in 15-20 minute increments. If we get this live stream up to 25 people, Hidden Freedom Investing will get his wish and he'll find out what I do for a living. But until then, we'll keep it on the down low, because Passive Income Investor has told me that I honestly just need to really just tell people, because it's very interesting and we could talk about it. I do investing almost in my day-to-day job, so it kind of has a different avenue of way of looking at investing. It still invests capital, still invests money, but it is what it is. So just shouting out and acknowledging some of the people in here. So Hidden Freedom Investing, already mentioned him. Rico Suave jumped in pretty early on. Not sure if he ended up joining us. I know JMac is probably prepping for his live stream a little bit later, so he probably will not be joining us. Gen X Dividend Investor, always in the live stream. He's everywhere on everybody's video. And you also have Lydia joined us. I saw that. And you also have Investing with AA Ron, Citizen of the Year, who I'd like to also maybe have on the stream as well. But yeah, it is what it is. And it looks like my friend John did end up joining us here. So I will bring him on in a quick second. But just in case anybody else is interested in joining us on the live stream, if anybody stands me up, I'm more than happy for any of us to kind of jump right on in. So feel free to join us. I put the link here. Whether or not, I'm hoping to go through the 4 or 5 people that I had on the list, and I'm just about to bring John Lee in. But if anybody else stands me up, I think I have another call set up for about, what was it? It was like 7:50 to like 8 o'clock-ish Eastern Standard Time. I'm an hour ahead of Eastern Standard Time because we don't follow daylight savings here in Trinidad and Tobago, which is, I was interested, but we always have 12 hours of sunshine regardless. So that's probably why we don't really change our daylights or the sunset and sun down, or sunrise and sunset rather, here in Trinidad and Tobago. It might vary by about half hour or so, but that's probably why we don't really observe daylight savings. But anyway, I think we're good. We're going to bring John in and see how he's doing.
All right. I'm assuming you can hear me.
Yeah, John, how you doing?
I'm doing pretty good. I don't have my cam enabled, but so
Okay, that's
I
perfectly fine.
did not get your questions, so I'm going to respond to them on the fly.
Okay, perfect. Yeah, I was lazy. I ended up leaving work a little bit later than I wanted, so I apologize that I never ended up getting you the questions. But really, what I wanted to quickly ask you is, first and foremost, thanks for coming on the show. You're the first person to really come on to Let's Talk Money, and a random person at that. I think you're actually the first person I've ever had bringing on a live stream at all. So the fact that you are a stranger, not to the YouTube community, you're not a YouTube creator, I think will be very interesting to bring into the community. And I think other people will probably end up doing it as well. But I'm really curious I guess, how long you've been following me, or is this kind of a recent time that you've been following me?
Okay, so I've been following you for I want to say about 7 or 8 months.
Okay, cool.
I watch PPC Ian and Joseph Carlson as well.
They're good, yeah.
And I used to watch Dividend Grinder. Rest in peace, buddy.
Yeah. I'm still waiting for him to get him on me on his podcast.
I thought his videos were super entertaining because of his personality.
Yeah.
Maybe that's just I don't know, but I'm sad he's not making videos anymore.
Me too.
I do still follow him on Twitter, so I do get some of his gambling sass.
Yeah.
So I started watching you about 7 or 8 months ago. My prior stock experience was semi-limited, but I basically I'm very blessed to be in the situation that I am now because my wife and I both grew up very, very poor. Okay. And we're from different countries, which makes it kind of interesting.
So are you in the U.S. or?
I am in the U.S. and she is also in the U.S. now, but she was not born in the U.S.
Okay.
So we grew up from two different parts of the world and very, very different, but very poor. So we're in a very, very wild, almost unimaginable scenario. So that's part of what my questions for you are going to be once you're done.
Yeah, I mean, we could take it either way. I'm more than happy to ask you questions, or if you want, we can talk, and have a good conversation. I'm more than happy to do it.
I want to know what your questions are first. So I'm super curious what your questions are.
Well, my questions were going to be very standard, like, how far along are you in your investment journey? What's your risk tolerance? Are you very passive, active in investing? Just kind of going along the initial 5 kind of questions that I always ask people when they are first getting involved in investing.
Okay, so
to see where you are and how financially into the journey, what your mindset kind of is in finance.
Okay, so I started, like I said, I grew up very, very poor. I did graduate high school. I've been to college 3 times, but don't have a degree. I do have certificates, but I've changed careers multiple times. But I knew growing up, because my mother raised me as a single mom, that I always wanted to own real estate. So at 24 years old, I did a lease purchase option in 2002 on a condominium. And then I ended up purchasing that condo 2 years later. And I've had that for 15 years now, and that's been paid off for 12 years. And when I got into that, I was really lucky because the broker that I worked with on the deal, it was a situation where someone needed to get out of the property, and I just kind of took it over. So it's basically what's considered a mortgage wrap, where you just kind of take over the existing loan on the property and then you pay it down. So I knew that I wanted a place to live where I was going to settle down, and I thought I was going to go into a computer networking degree, finish the degree, and then go into networking. And that was just, I was going to be set. I was going to have a place to live. And then my wife kind of changed that entire direction, and I've moved around the country a little bit, a couple times since then. But
was that to follow her career, or?
Yeah, so I worked basically in support for a software development company, and she works in development in software development. So she's on the dev side of the business. in high-end project management and release software management. So doing like platform work and things like that. And then I was on the opposite side of the spectrum doing the like customer facing side of the business and a lot of auditing work to make sure that, the customers were taken care of by the business. So I kind of gave up my career about 8 years ago to allow her to follow and build off of her career. And I went into full-time real estate investment and
That's
property
awesome.
management.
So
So,
do you utilize the lease to own option a lot now because that's
okay.
kind of how you got started?
So it's super interesting. And I started in 2002 with that first lease. I actually took it over and bought it in 2004. The market crashed in 2008, but I moved for work from the state that I was in to a neighboring state. And I purchased a foreclosure property that was purchased by an investor who bought up a whole bunch of brand new houses that had just been built in 2005. And he did the little to no money down. Basically, he only put about 25% down as an investment loan. And when the market crashed, he lost about 50% of the value on the properties.
Wow. Yeah.
So he basically short sold the properties, and that was the second property that I purchased. So I walked into that property knowing that it had just been built, and I had a little bit of real estate experience, but I purchased that property just putting 20% down.
Wow.
But because it was a short sale, it was basically the bank has approved the property to be sold at a very low amount compared to what the original loan was. But it was enough that he squeaked away from it with only getting about $20,000 to the bank to get out from under the loan entirely after it sold. But I knew walking into the property because it was like a model home for the builder. They put upgrades into it, so I walked into the property knowing that there were about $40,000 to $50,000 worth of upgrades on the property.
Oh, wow.
That I knew that if I held it long enough, it wouldn't matter what the market was doing in 2008. So I got into that, and I house hacked that by having my roommates from work, from the new job that I had just gotten in a new state. Basically, I lived in that house for free, and I just chunked the mortgage down, doubling to tripling what the mortgage payment was. And we paid that property off in 2015. So it took 7 years to pay that off.
And are you going into equity? Are you pulling out equity to purchase more properties, or?
Okay, so I'll get to that in a minute. Yeah. So my wife took a job, and we moved halfway across the country from where we were. And they gave her an equity offer. And this is like, we both had 401ks. I was solid contributing to it. And I set her up to do literally maxing it out, because where we were living, the rent was obviously, we all lived together in that property for a while, and it was super cheap for us, almost non-existent in actual cost. Just utilities were literally what we were paying. So when the opportunity came up, I left my job and we pursued this avenue with an equity option. And in 2015, we paid off the other property, but we moved in 2012. So I rented that house out to the people who were literally there, and they're still in the property now. But when we moved, we took an equity option that I don't know that I necessarily understood what was going to happen, but the company ended up being really successful in getting sold.
Wow.
And in December of 2015, those options that we had just literally been given a couple years beforehand, all of a sudden actually had real stock value.
Yeah.
And part of it was immediately cashed out. And then part of it was doled out in the new company's shares. So that leads into one of my questions for you, is going to be like, we now have this ridiculous nest egg that we didn't have before in stock in a company that unfortunately is super downtrodden in the market right now due to the political
Mm.
ambiguity that's kind of up in the air with our current, American political leaders. So that stock is, to me, it's beat up. And I read, the Morningstar reports. I read, Seeking Alpha because of, your channel and Joseph Carlson, and PPC Ian kind of leading me into actually digging into the stocks that I want to own and stuff like that.
Mm-hmm.
But everyone says that the stock is undervalued by like 30 to 40%. And I believe it is as well. The problem for me is that it pays an almost a really pathetic dividend, which I really want to be a dividend investor. And that's kind of where my mindset is that I want dividend growth over the years that we're going to be working, because we're a little bit older. We're 40, and we don't want to work for the next 25 years. And we would like to retire within the next 10 to 15 years and have a really comfortable living experience. So when the payout happened in 2015, we took a chunk of that and we bought another condominium in the same area in part of the world that I already had one in, because I knew that market, and it had done really, really well for me over 10 years prior. So we bought that outright with no mortgage on it. And they're not expensive. They're what I would call below the median housing for the United States.
Mm.
So we bought that's the third property that we had, and we paid off the house. And I realized that I had a huge learning mistake in paying it off, because investment properties give you tangible benefits to your tax bracket when we're now in a much higher income bracket than we've ever been before. And we pay like 40% or more in taxes.
Wow. So you're living in not only
we're living in a high tax state, in a higher tax bracket now than either one of us have ever been.
Okay.
And we try to pull that down, but I do all of my work. I don't have like a traditional 401k I can contribute to anymore. I am this past year, as of 2018, I started doing the backdoor Roth IRA. So I'm trying to get that all rolled over and converted properly, and learning that process, just because of the tax brackets that we're in. I don't know if our income is always going to be this, but it has been this for the past like 3 years.
Wow.
So it's not having a whole bunch of
problem to be in, man. Tough problem. I mean, it's a good problem to be having.
It's a great problem to have, but no one in my family has ever had money, and my parents were not financially literate at all. Always living paycheck to paycheck, always buying cars that they couldn't afford. Like my grandfather made fun of my mother all the time, saying that she lived a champagne lifestyle on a beer budget.
Yeah. My parents called it something different. Well, people in my family have called it different name, but very similar. Yeah.
So ultimately, we have that stock, and that's all vested now, and we've obviously had that for more than the 1 year. So if we sold it, we would only be paying the capital gains tax. Mm-hmm. However, if we sold it or did anything with it right now, we would also pay heavily state income side as well. So we pay tax there, then pay federal. And because of the way the market is right now, I don't really want to take out anything from that. However, what I did this year was I realized the mistake that I had kind of made by paying off the properties and not just holding the mortgage to use that on an investment property. We would get to reduce our taxable income for the property taxes, all the expenses for it, any maintenance, repairs, all of that stuff. It all reduces our income. So I talked with my CPA this past year in April, and I was like, we're at the point where we could do a cash out refinance, and it's an investment property with an investment loan. And if I paid down the interest rate by buying a point off of it to get it at 4.5%. and then I pulled out more from the property than we ever put into it, uh, by about 30,000 over what we paid for the property originally. Um, so I had this bundle of money, and I've been rolling a huge chunk of it into stock because I'm shopping for the next property, but I knew that I was not going to spend the total amount of money on one property. So I wanted to get the ball rolling and figure out what type of stock investor I wanted to be. And I've kind of channeled that off of PPCE and advice, and using a platform to kind of build off of and jump from there. And I've been dollar cost averaging it because I'm learning enough about stock and the positions, and I've seen the way that you buy and the way that everyone seems to be consistently just buying for the YouTubers. The way that they just seem to all operate is everyone seems to think that that's the best way to go.
It's consistently buy. So for me, so I guess my thought process is I'm only 28, so I have a little bit longer of a time horizon, and so even if we do have a year or two of downtime in the market, it's going to be relatively short-lived comparing to my time horizon that I'll be investing in the market. So for me, I'm still hoping to be investing, say, 40-50% of my income year over year, and so yes, in the short term, I'll probably lose money on paper, but what I'm actually aiming for is the dividend income that kind of comes through, rather than the actual total value of the portfolio. And so I was going to ask you a clarifying question, and then unfortunately, before I got some other folks starting to join us as well that are I told to join us at around 8 p.m. Eastern. But before we jump, I wanted to ask the folks in the live stream to ask a couple questions for John before I move on to either Jesse or David. I have to figure out which one I asked to come first. But John, my question for you is, are you looking more for a total value number or a passive income? Or maybe not, a passive is not the right term because real estate is far from passive, but are you looking for a cash flow monthly sort of number?
So my goal is to get to about $6,000 a month in income coming in. And right now, between all of the real estate investments that are paid off, it's right about $1,800 a month just from that. Now from stock, because of the way that it's kind of worked out, right now we're only at about $300 a month from stock. But right now, like, I'm in a similar situation to you where I'm trying to figure out how much we can save every month, and I'm trying to deploy it. I would say my goal is to do $1,000 a week in just into stock alone, while I'm also trying to buy another additional property.
So you said 1,000 a week?
Yeah, right now we've averaged 1,000 a week since April.
So 1,000 a week. So let's just take, for instance, you do 1,000 a week, you're investing at about 4%. So every year you're getting about 160 or so every month you're getting about 160 or so, maybe more, of income being generated if you're investing at about 4%. I don't know what your target dividend rate is, or if you even have one.
So right now I'm right at about 4%.
Okay. So yeah, if you just keep doing that within a year or so, well, I guess the way I would put it is you're buying like about, what is it? It's like close to $14 or $15 a month in income. Maybe it's closer to $13 a month in income every month, if that makes sense. So you do that for a year, you're probably going to buy yourself, close to $150 a month in income. And the way that I look at it is, it might start off small, just like mine did, but I was probably around what you were doing, and maybe even still, we're probably pretty comparable to how much we're investing monthly. But that 4,000 a month, man, that just builds. And the way I look at it is, at this point, I'm up to just under $1,000 a month, and I've been doing it for 4 or 5 years, I guess now, like very heavily at the rate that I've kind of been doing it. So if you continue on that path, plus you're doing the real estate, I mean, I'm sure you'll do well. And especially if we end up with some sort of downturn in the near term, um, say if we go down by 20-30%, you're just going to be able to purchase more stock. And I think that is, you're going about it the right way. In my opinion, is you're following the right people. I love PPCE, and he's one of the folks that I follow most. So if you seem extremely financially educated in terms of, yes, you might be doing real estate. I more so focus on the stock world. So I'd love to talk to you more about the real estate aspect of things, because I also want to get to that point as well. But yeah, I mean, I don't necessarily know what I can really help you with. It seems like you're really doing what you need to be doing. I guess, do you have any specific questions?
So I think my specific question is would you move a foreign position if it was, so right now that position alone is about 80% of our entire stock portfolio outside of 401k. So like I said, we're at about 100,000 in just the current stock portfolio that I've done this year. So I'm trying to figure out if it's a better play to diversify more of that income or more of that stock specifically as soon as it reaches like a certain threshold. And then just, would you trickle that money in afterwards? Say, $200,000. Would you trickle it in afterwards and just dollar cost average in like 20,000 a month? Or would you kind of do a smaller amount, like 5,000 a month, until you see a dip, if a dip even occurs next year?
So I guess you lost me briefly. So you're saying the equity that you guys got in the company that you work for is about 80% of the portfolio?
Yes. So
Okay.
right now, of all the stock that we hold, that's 80% of the total value.
Yeah. And
So,
you said it has a very minimal dividend as well. And
yeah,
it's obviously a tech company.
Yeah.
Wow. Yeah, I mean, it's tough to say. I mean, like you said, you kind of have a want for it to be higher value, but at the same time, like Lydia Santiago saying, 80% of that, is pretty scary if that's really what the total position is worth. And yes, while you might be potentially losing out, you could also think of it as, if you were to move that, like you said, that 80% value, say, into something that was yielding around 4%, how much closer does that get you to your goal? And yes, you might lose potential upside if you're thinking about it that way, but your true goal is, like you said, 6,000 a month. If you're able to move that 80% in that one stock and, get you 1,500 a month, I mean, on average, I mean, that, in my opinion, would be awesome. I mean, it sounds like that's probably close to what it would be. I mean, you have a pretty big portfolio at this point. And if you were to move that single stock position into something that yields a lot more, I'd hate to say sell it and then eventually, like, you know what I mean? Like it goes up crazily.
So that's the thing. It was up in the like $60-$70 range, and then it's, because of the political drama, down, about half the value right now. Mm-hmm. So if it went back up rapidly, that's the kind of thing that I am like kind of concerned with. And we've kind of discussed like a number that if it got to that, we would want to sell a bunch to diversify it. But selling it basically means whatever year we do the sale in, we're going to eat 15% of that, in a tax burden.
Yeah. It's not Skyworks Solutions, is it?
No.
Okay. I was about to say, I used to be invested in Skyworks Solutions, but anyway, yeah, it's a tough one to say, but I think what ultimately you need to look at is you kind of have your goal, and unfortunately, that goal is hopefully what dictates what you want to do. But yeah, like you said, I mean, I don't necessarily think I would do $20,000 tranches. I think that's pretty scary. But
so would you go something like 5 then, or
every month?
Wow. Yeah, like 5 in addition to what I'm currently doing, of like 4,000 in a month, because 4,000 is just general, like that's the real estate income because we don't use that. We're just redeploying that into
Right.
stock specifically. So
Yeah.
I'm trying to shift all of my income that I earn into stock and trying to save as much as possible.
Mm.
So like that's the kind of struggle that I'm having, because a lot of the channels that I listen to, like they're relatively, yours is one of the largest revealed portfolios, and that's really why I wanted to come on here and ask you about it.
Until Gen X dividend investor shows us all. Um, let's see. Yeah, I mean, I don't think either way. If you do that either way, you're not gonna lose cash flow, but you might lose capital gain upside. And so I would hate to tell you to sell, but I think you already know that, and I think that that's why you're asking the question. Because you know that selling might be losing capital gain upside, but you understand that you're wanting to do dividend investing. Um, but yeah, if I personally would lean on the slower approach of maybe not doing 20,000 a year or 20,000 a month, sorry, but 5,000 a month, because it is a very significant position. I mean, it's 80% of the value of the portfolio, so that's scary to me. Granted, I know it's sad to see something that potentially might be undervalued, but if your true goal is cash flow, then in my opinion, I would go for the cash flow. And it's only going to get more and more. I guess the dividend growth is only going to get more and more. Like for me, if I match what I did last year in terms of dividend growth, just on its own with reinvesting dividends and dividend growth, I'm going to get over like $1,200 extra in terms of dividends, not just gains in the portfolio, but actual dividend income. If I were not to invest any more money right now in 2021, my dividend growth would probably be an additional $1,200 just that year. So, I mean, it starts getting pretty significant, and that ends up being $100 a month with it just growing on top of itself. You know what I mean? So you're not doing anything wrong. So it's very difficult to tell you to steer you in a different direction. So I apologize if it's kind of wavering.
No, I mean, it's really interesting to like hear your perspective, because, like I said, nobody in my family's ever had money. And we hide the amount of money that we make from our families, because it's problematic. Family and money don't mix, nor does letting family stay in rental properties. I've learned that lesson the hard way too.
Yeah.
So I appreciate your time and getting to talk with you, and I hope to get to chat with you some more down the line.
Yeah, I mean, I'm very interested. I'd love to have you on for a whole hour, maybe in the future. So definitely keep in touch. Very interesting conversation, but unfortunately, I have Jesse waiting here. I think I have him. I don't know if there was any big questions that kind of came out here. Let me just double check. A lot of people are asking, or if you're in New York or California. I don't know how comfortable you are answering, but there was one or two people asking that question.
So not from either one of those, but yes, we do. We currently reside in California.
Yeah, so in the high income tax bracket, you're paying probably close to 12% in state income tax. So that's pretty absurd.
Yeah, so it hurts. Every tax season really hurts, and like trying to find ways to bring it down are absolutely like kind of critical for me. I've learned a lot about, like, first thing was hiring a CPA. Like a CPA is already going to save you so much.
Yeah. I mean, in your particular case, any dollar of depreciation you can get, is basically $2, because you're able to write 50% of it off, you know what I mean? Or any sort of value you're able to invest, you're basically getting, $2 worth of an investment, just based off the fact that you're able to write off, however much of that dollar. I mean, that's insane. 50 odd percent taxes is pretty wild. I don't know how we ever got to that. But Lydia also had it, and Lydia is a good YouTube creator as well. She focuses on. She used to do Robinhood, but she switched recently. I forget what one she switched to recently, but she said that if your dividend capital appreciation, if your goal is dividend, then the capital appreciation of the portfolio is a little bit less important, which is kind of my philosophy. A lot of people are like, what's your end goal? And it's like, my end goal is a dividend goal. It's not a capital total portfolio value. But a lot of people don't think that way. They always generally think, oh, I need $2 million. I need $3 million. I think about the way that you're doing it, 6,000 a month, 5,000 a month. That's the goal that I'm chasing. So.
Yeah, I know for a fact that we don't drive fancy cars. We drive 8-year-old vehicles, stuff like that. Our expenses, even in retirement, aren't going to be that high, and we're not going to retire in California or New York.
Yeah.
So that's just kind of the way that it is. Those numbers are realistic figures that I know that we could live very comfortably on. So that's why that number is the way it is.
Wow. Well, I really appreciate you stopping by, John. I will reach out to you to see when we can get more of and if you'd like to reveal your face, that's fine in the future. Don't feel obligated, though. I had a great time talking to you, and even just, talking about real estate, even off camera, I'd be more than happy to get your opinion, because you seem like you know what you're doing, and would love to hear your coaching, and we can coach each other if you don't mind.
Absolutely. That would be fantastic.
That'd be a great relationship. Thank you, sir. Appreciate it.
Yep.
All right. Cheers. Hey, Jesse, how you doing? Thanks for waiting. I knew that I told you I'd bring you on about 10 so minutes ago. So.
Hey, how's it going? Yeah, no worries. I definitely understand with this type of situation, so it's good.
Yeah, and I apologize. I didn't do my best at being very strict to deadlines or also giving you questions or anything like that. So really appreciate you kind of diving into the unknown here. This is my first time ever really hosting. I'm not as organized as JMac Investing. He's very like, hey, show up at 8:15. We're going to give a little pep talk beforehand, and these are the questions beforehand. I mean, he's real professional. So I apologize. I am not as professional as him. So I offer the same to John as well. We could either start asking you some questions, or we could just have a good conversation. I don't know what you think.
I would say let's just have a conversation and see where things go. No particular questions for me on my side either. So.
Okay, very cool. So just curious, how long you've been investing, and if you want, reveal your portfolio size, what kind of investor you are, how passive or active you are in investing.
Okay. So for me, I mean, I haven't been investing for too long. So as a kid, I always wanted to like own a bunch of businesses and obviously make a lot of money. I always asked my mom what career was the highest paying career. And as I got older, I realized that it's not about what pays the most. It's going to be about what you can handle and what you can manage. So,
yeah.
So I'm definitely, like I've said, I haven't been investing too long. I'm more into like cryptocurrencies.
Okay.
Which is kind of like Bitcoin and all that type of stuff, which I got into around 2014 or 15. And I also, so most of my holdings are going to be in cryptocurrencies, but I also invest into the stock market and off of Robinhood, as well as a 401k.
Interesting. So it seems like you're probably in your early or your mid to late 20s. Is that probably right?
Yeah. So I'm 28 right now.
Okay, we're the same age, man. We're in the same boat. You got plenty of time to get your whatever goals you're wanting. So what are you looking to get out of investing? I know you just gave a lot of information. That's definitely a lot of good stuff to start talking about. So what are you trying to get out of investing? Is it like a passive income goal, or is it total capital value portfolio size?
Okay, so for me, it's going to be passive income, such as dividend income, rental property, income in the future. Those are going to be my two main goals for passive income, and there's probably going to be the two main staples of most portfolios that are passive. So that's really my goal, is just getting my foot in the door with dividends as well as real estate. But it's kind of hard to get into real estate if you don't know what you're doing. So
Yeah,
that's kind of where I'm at.
We both need to kind of have a conversation one-on-one with John Lee, apparently.
Yeah, I agree.
That's what he's doing. And I think Hidden Freedom Investing, I've talked to him as well. He invests in real estate notes, which is a little bit different. So I don't know if you've ever looked at that. I've tried looking it up as well in the past. And he's kind of gave me some coaching on that. And so would love to dive into that with him as well in the future to kind of get an idea as to what I could do for that. My question for you, that was a lot of good information. I really appreciate you sharing that with me. My question for you is, if you are looking to get into passive income, how does cryptocurrency kind of fit in? I'm not going to try to bash you, because I've also done cryptocurrency in the past, as well as some other folks, I believe, in the live stream. So I'm just trying to understand, if your goal is passive income, what role does cryptocurrency play in that?
So for cryptocurrency in my case, what I'm looking to get out of that is to ride the wave of the next bull run for cryptocurrency, and then obviously I can't time the top, which not many people can, but I want to ride the wave as long as I can, and whenever my portfolio gets to 150, 200,000 on the cryptocurrency side, I want to take it out and then transfer it into. I'm either thinking of transferring it all into dividend-paying stocks, or I'm looking into doing partially dividend and then partially real estate. So if I were to So my goal is probably 200,000 for the cryptocurrency, and when that happens, I would like to take out those funds and then put a down payment on a rental property, say 20%, and then probably put the other 80% into some kind of dividend portfolio.
Yeah, that's cool. No, that's really wise. I have a quick question for you. Is it like 10% of the portfolio? Is it like 20% of the portfolio?
For that I have in cryptocurrency?
Yeah.
That's going to be probably about 50%.
50%. Okay. Yeah. I mean, we're young, right? So like, I'm not gonna, some people are really into it. My one coworker, he's a real big dividend investor as well. So down in Trinidad, he invests in U.S. stocks, but he tells me, he's like, man, you need to buy some. And I used to be, all about it in the wave, and I still have some Ethereum, but I was more along in the mining side in the past.
Okay.
So I was building the computers, and I did it with a coworker, and I was, messing with the GPUs and all that, and it was a lot of fun. And I ended up selling the computers at a decent profit. But yeah, I'm not against cryptocurrency. I just think what the way I look at that in the past was, it's kind of like high growth stocks, right? It's kind of, and I have this kind of thought mentality about high growth stocks as well, is if I am able to put 10, maybe 20% of my portfolio into higher growth stocks, then I might be able to grow the portfolio size larger. And once that portfolio size gets to a decent size, then focus on the capital preservation dividend aspect of the portfolio. And so I understand where you're coming from, because at the moment, I feel a lot of times when I tell people the get rich slowly kind of scheme that I'm running, not scheme, but rather, strategy that I'm employing with dividend growth investing or just dividend investing as a whole, people think I'm investing like an 80-year-old man. And so a lot of times I get, scoffed at, but then a lot of times that's also people that don't have any investments at all. So, it kind of goes both ways, but I really admire your different approach to the investing. So when you I guess, get your income on a monthly basis, you purchase about 50%, or is it kind of like this month I'm going to purchase stocks, this month I'm going to purchase Bitcoin because it's down a little bit?
Okay, so what I save or invest percentage wise of my income is going to be between 20 and 35%.
Okay.
So I usually invest um, uh, mostly. So like I said, I do about 50-50, but 50% of that is going to be in my 401k.
Okay.
And then the other 50% is going to be in just straight cryptocurrencies. So
Okay. There's nothing wrong with that. And so you don't have any, you don't have any non 401k dividend portfolio or anything like that?
I did have some. I had Ford. I had AT&T. I didn't have too much. I had just a few thousand, but I decided to liquidate that and then go straight into crypto.
Okay.
Just because the upside of cryptocurrency for me on my outlook is just so much brighter in the 3 to 5 year range than I would get from dividends right now. So and
Yeah. So
so
living in another country where, especially for me, getting the experience that I've had, it's really changed my perspective on money and money movement throughout the globe. So I was heavily influenced previously by the greenback, obviously, the US dollar, which is supported in oil purchases and this and that. And, you have a country of, say, 300 to 350 million people utilizing on a day-to-day basis. And most of the people in the world deal a lot of times in US currency because it's such a large economy. So people, generally speaking, will have greenbacks or dollars or bucks on hand. Then I come to a country like Trinidad and Tobago, which has, let's say, 1.4, 1.5 million people. They have their own version of the dollar, the Trinidad and Tobago dollar, but very few people utilize it. So going outside of the country and trying to exchange it with anybody is useless. For example, I was at a high school reunion on Friday, and as a joke, a lot of times when I go to the U.S. nowadays, like the 2 times that I've been to the U.S. since I've been living in Trinidad, I'll tip people in Trinidad dollars because it's kind of a cool talking point, and also, like, generally speaking, if you tip someone in a couple Trinidad dollars, it's not that big of a deal. It's not too much or too valuable. So I'll tip somebody 20 Trinidad dollars, and it's kind of cool because it's like, oh my God, $20, but it's really only like $3.50 here. But it just goes to show you that, they were kind of starting getting upset because they're like, I don't use Trinidad dollars. How am I going to get the actual value out of Trinidad dollars? I have to go to an exchange and this and that. And it's just like, you start to understand the validity of cryptocurrencies being that, you don't need to go to an exchange, and that generally speaking, the transaction cost is relatively low. And anyway, so I understand a lot of folks wanting to do transactions and get their cryptocurrency up because it's a lot easier to exchange money globally utilizing cryptocurrency rather than specifically trying to exchange greenbacks and say like Trinidad dollars and stuff like that. So I have a newer appreciation for it as well, rather than the typical U.S. sort of exchange, the U.S. dollar and stuff like that. So yeah.
that's interesting. I kind of see where you're coming from. I see where you're coming from about the Trinidad dollars and some people not being able to use that as their currency in their country. So I definitely understand.
And another story is I went to Antigua, a month or so ago, and I accidentally handed the guy. I thought I was handing him 100 Caribbean dollars, Eastern Caribbean dollars, to pay for a taxi ride back to the airport. And the guy gives me a strange look, and I'm like, does he expect like a tip, or I was confused. He's like, this is worthless. And he hands it back to me. And I realized that I handed him a Trinidad dollar, which is about 40% of the buying power maybe of the Caribbean dollar. And so I guess he thought I was trying to jip him, but I just unintentionally gave him the wrong value currency. So it just goes to show you, currency is only valuable in whatever country you're in, whereas cryptocurrencies is valuable universally, right? I mean, it's backed by, say, something like the US dollar. It's backed by the Japanese, it's backed in every currency, everywhere. So it's almost like, it's kind of like a gold almost. Every country has a value of gold, but it's generally speaking universal. So in that respect, it's pretty interesting.
Yep, I definitely agree.
But I cut you off. What were you going to say?
Oh, I don't remember, but that's all right. Yeah, so with cryptocurrency, it's very interesting, and it's very awesome to see the innovation that you can sign up for with an exchange. Go ahead and send money to that exchange, and then you can buy a cryptocurrency, and then you can send that cryptocurrency to, say, let's say China or Trinidad, and that cryptocurrency will be there within 5 seconds of you pushing that button, compared to wire transfers, the bank transfers that take 2, 3, 4, 5, 6 days, which is it doesn't make sense to me, and it shouldn't be that way at all. But that's how it is, and it's I think we're starting to see a shift, not just with I think the invention of cryptocurrencies. We're kind of seeing a shift with the banks trying to innovate their products. Not just innovate, but they're also trying to stop cryptocurrencies. So basically, if you deal with cryptocurrencies, they are more likely to shut down your bank account or not even do business with you. So I kind of see the good and the bad on both sides with that.
That's interesting. It's definitely picking up steam. So I guess my question is, we can continue to go down the cryptocurrency route, or I'm more than happy to answer any sort of questions you have. But I'm really curious if anybody on the live stream, we've been up to 25 people or so. If anybody has questions for you, I'd love to entertain some of those, and also hear what people have to say, because I know a lot of these guys are dividend investors, and they watch me for a lot of the stuff that I talk about with dividends. But in the meantime, while they're thinking up questions, is there anything that you wanted to really hear about from me, or is there any way I can help you in your investing career?
So my question for you is would be, real estate is a very good wealth building tool for families and generation
wealth.
Yeah, exactly. And it's known to be the number one wealth building tool among people. So I understand that you're in it for income, obviously, with dividends. But do you see that you could put your capital and your money into real estate, and then have it work faster and more beneficial for you than in the dividend side?
No, I mean, you are hitting the nail on the head. So I've slowly started, I obviously have this YouTube now sort of persona where all I generally chant about is investing specifically in dividend paying stocks and stocks and stocks and stocks. But in actuality, in the back of my head, I kind of have this mental map of myself having about anywhere between 20 to 25% of the portfolio total, total gross portfolio, whether in a portion of that being stocks, so 25% in stocks, 20 to 25% in physical real estate, 20 to 25% in a personal business, less than 20% in cash, and then 20 to 25% in online businesses and websites that help generate me income. And so at the moment, I have a very great head start on my my stock portfolio, and I also have a decent start on my my online sort of businesses that are kind of coming up. But I'm lagging behind in the physical real estate aspect of things. I do have real estate investments, whether you want to call that, and say like Cardone Capital. I have some investments. I also have some investments in, real estate investment trusts as well. But I would want to move those maybe into more physical real estate, because there is a tax benefit associated with investing in those, like we heard with John Lee. And then there's also me wanting to create physical, maybe more brick and mortar sort of businesses, or actually even kind of like what I'm doing now, set up, maybe go take some tests, get certified, and actually open up my own, capital, investment firm where I help local people invest their capital, whether it's in small businesses or what have you. I mean, those are all sort of avenues that I'm trying to get into. But I think at the moment, while I'm trying to build capital, and I end up spending anywhere between 10 or so hours or more at a typical 9 to 5 job, is what you would say. The easiest one for me to accomplish is stock investing and online businesses. And getting the other things and pushing the other things down the road. Real estate is a little bit more active, or the portion that I would want to be initially would definitely be more active, and I would need to have a lot larger of a portfolio for it to be more of a passive sort of investment where, I have, let's say, a couple hundred physical units that I could then hand over to someone to manage, and that amount of units would be able to pay for someone to manage it rather than that sort of aspect of things. So I definitely acknowledge that real estate is something I'm definitely going to get into. I also believe that it's a strong builder of wealth. But I think the reason why people do real estate and stocks so much in their generational wealth aspect of things is because a lot of times building a business will take a lot of time, effort, and it eventually explodes. But I think what people end up doing is they kind of fall back on stocks and real estate as a capital preservation tool. So if you think about it, if you look at Bill Gates, you look at a lot of other investors, they'll take their money out of their own company stock most of the time and start siphoning it off into other things. And it's not because they don't believe in Microsoft, or they don't believe in Apple, or they don't believe in Berkshire. It's because other businesses kind of diversify and also help preserve that capital as well. And so I believe real estate also does the same. And so that's why I also believe people do the real estate. So I don't know if that was just a very roundabout way to answer your question or my thoughts about it. So yeah, I don't know what your thoughts are about that.
I definitely see where you're coming from, and I think on your side, basically, what you're saying is you would need more capital, and you would need more time to kind of learn that side of the business, which I definitely am in the same boat. I would definitely need to see how that side, how real estate works, because before you actually invest in it, in anything, it's scary until you put your foot in, and then you kind of dip your toe in the water, and then you put your whole foot in, and then after you get your foot in, it's a lot easier to get, it's a lot easier to really get into it and learn. Whenever I first started learning about the stock market, it was scary, but it's really not that scary with all the information out there on YouTube and on the internet, and there's just so much knowledge now that you can actually access and learn, which I definitely would urge people to do. but not everybody is into investing. So I mean, if the people that are wanting to learn about investing are here, you know what I mean. They're gonna find people like us and people like you that have created a community. So
Yeah, no, that's really good insight. Yeah, when you were talking, it's kind of like the way that I'm starting to look at it almost is it's going to take the same amount of time and effort to get you to start on, let's say, or not, maybe not the same amount, but what I think it ends up happening is if you were to start on like a single family home versus, let's say, like a 16 unit apartment complex, it's generally speaking going to take you the same amount of time to start getting up to speed. Yes, it might mean that you have more capital involved in, say, a 16 unit apartment complex or a single family home, but it's a lot like investing, right? It's like, I think a lot of times investing, what ends up happening is some people do one single stock, they might do 10 shares, and it doesn't go well. It could be a penny stock, it could have gone sideways or what have you, and then immediately turns them off from investing. And I think the same probably ends up happening a lot of times in real estate. I know a lot of people that have bought their first individual home and ended up doing either really successful at in being an individual real estate investor, and other people that were like, I'm never going to do that, real estate's a scam. And I've seen both, and I've seen both in Houston, I've seen both in Pennsylvania, where I used to live as well. And I think what it is I think it's just people maybe not having the right education or going into it inappropriately. The people where I've seen the most success in real estate, kind of like what John Lee was saying, is he purchased the home as his initial property and lived in it for several years, and eventually turned it into, after several months, or several years, I'm sorry, turn it into a rental. And so at that point, I'm sure rents rose over that time period and whatnot. And now I think what ends up happening is when you purchase single family homes now, it's generally competitive. You're not only competing against, say, individual investors who are going to try to get the price down, but you're also most of the time competing against people that want to live there full time as their individual homes that they can go home to every single day. And so what ends up happening is, those people will purchase, because they get emotionally attached, regardless of what, in my opinion, regardless of what the economic value is, because they want to live there. They fall in love with the property. Whereas us as potential investors are trying to get it as cheap as possible. At a certain point, when the money in the investment doesn't make sense anymore, we'll walk away. And even still, I believe those people will continue to bid up the price because they want the house. And so it's almost like, as long as you go into, the best use of the property, like, say, commercial real estate, or investing in, say, multifamily real estate, it's like at some point you're going to walk away when the deal doesn't make sense. And I think what ends up happening is, I think a lot of people purchase single family homes and just assume they can pay regular price because the competition's higher with people wanting to buy it, and eventually they try to rent it out and they're like, I'm not getting the money I wanted to, the AC broke, and then they just write off real estate investing as a whole. But yeah, I mean, at what point do you think you're going to buy your first property?
I would say, so me and my fiance have purchased a home a couple years ago, for our primary residence, and we've also talked about what John Lee would talked about. I actually missed most of his conversation because I came in late, but so we have our primary residence, which we're actually talking about doing the same thing as renting out our primary residence, and then either going to purchase another property that we move into, depending on which one cash flows more. But we're looking between probably 2 to 3 years is going to be our time horizon on purchasing another home.
That's pretty cool. What part of the country do you live on, if you don't mind me asking?
I live in the Phoenix area.
Okay. Oh yeah, you did.
So Phoenix area. Yep. I'm not sure if I mentioned that or not, but yeah, I live in the Phoenix area, and the housing market is pretty good. Pretty good
Yeah,
here. Obviously, it's a big city, so there's going to be a lot more competition for buyers and sellers. So basically, the bigger the city, the more demand on both sides. But there's a lot of there's a lot of houses out here, a lot of houses being built. So Scottsdale is a good area to buy homes in.
definitely.
Tempe area, yeah, Tempe area, and there's a lot of people that are actually interested in buying real estate in Scottsdale. But that's the area that I live in. It's going to be the Phoenix area.
And so, what's the income goal on a monthly basis, or is it um,
Um,
event?
individually, it's going to be probably close to 50,000 per year
That's
passively. So it would be a total of 100. That's going to be after all the no debt except for the properties.
that's cool.
So that would be the goal. Yep.
Yeah, that's my medium term goal is to
Okay.
get to that point. Hopefully, the goal is to hopefully get there in five. What did I say? 5 years, 5 6 years, but we'll see. Um,
Yeah.
it's aspirational, right? But at the moment,
Yeah.
yeah, it's currently, including YouTube and stuff like that, it's probably around 14 or so thousand that I'll probably get to in um, 2020. Um, or I think that was just dividends was 2020. So maybe 15 to 16,000, including YouTube income as well. Um, hopefully, and then also some of the side businesses that we're starting, me and Kyle, the passive income investor channel, we've started trying to do a little bit of stuff on the side as well to hopefully get some additional side income from that. And we've already broke $100, so $50 for both of us this month because of the people that were helping buy some of the products and the courses that he has. So, and if people are interested in seeing what we're offering, there's a link down in the description. But that's really cool. Yeah, 5,000 is something that you can definitely get to. And once you get to that point, is it just walking away from investing at all as a whole, or is there kind of like a secondary goal behind that? Is that kind of like your medium target, and then your long term target is 100,000 a year individually?
I think in the safe answer or the right answer would be that at that point I would have to reevaluate how I feel at that point. But I think like you said, the medium goal would be 50,000, and then at that point, we would both feel better about not having to rely on our current W-2 jobs to bring in that income and to pay our bills and put a roof over our head. But I think in the long term, probably around 100,000 would be sufficient for us to, what, we're good. We don't have to work the rest of our lives. We can pay for our medical insurance. We have all of our bills paid. We can travel the world. We can really do whatever we want with our time,
Yeah.
because at the end of it, my time is going to be the most valuable thing. All of our time, so that's going to be our most valuable thing. So,
No,
um,
that's perfectly said. I mean, I had this conversation with somebody the other day. They're like, "Okay, so you get to 33, what are you going to do next?" And my thought is like, well, I love what I do. I mean, I probably still keep working. Maybe if I was doing it really successfully, I might quit my job and, try to start up other businesses. But I love what I do currently as a full time job. So I probably wouldn't give that up, at least for what you're saying. And in the medium term goal, if I was to get to this $50,000 a year sort of thought. But what I did acknowledge was the more and more passive income that I get on a monthly and yearly basis, the more clear I can think, because I'm less reliant on, say, the paycheck, and I'm more able to understand what's the right business decision. Because when you're relying on a paycheck, you act differently towards your boss. You are trying to please them to make sure that you're potentially, in their good graces. But when you're financially independent, you don't necessarily need to rely on that boss anymore to make sure that your survival is met. And therefore, your mind is then clearer to make the appropriate business decision, as you see it fit, rather than agreeing 100% and wholeheartedly with them just to prove a point that, hey, you're a team player and stuff like that. I mean, then in my opinion, it's like almost unlocking a different level of achievement. I mean, it's like unlocking I guess breaking free out of the cage almost is maybe the right term, that you can not be hindered by what used to hold you down, which was the paycheck. Now it's coming in regardless of what you're doing, and you can then act in the appropriate time, whether that's staying at home, being passive, or whether in your case you want to continue to invest in, say, real estate full time because you enjoy it, and now because you make enough money to live passively and still probably feed a decent portfolio, you're going to have even more fun, because now you're not doing it to meet the bills. You're doing it because you find enjoyment out of it, and it's fun, and you get to meet people, and the smaller little things that matter, not the under the motivation from stress, I guess is the term I'm looking for. So not sure what your thoughts are on that.
I definitely agree. I definitely agree. And the more that I work, and the more that I am just out in public and interacting with people, the more that I see that people are unhappy. And they're unhappy because they don't like what they do. That they have to rely on a job to put a roof over their head and food in their bellies. And I don't want that for myself. I don't want that for my family. I don't want that for me and my fiance's future. So I definitely agree that we're empowering ourselves by learning and sharing with others. This is not just empowering. You're not just empowering yourself, but you're also empowering me and my future kids, and you're impacting multi generations. So I definitely agree, and my long-term goal is happiness, and this is going to be what brings me more happiness in the future, is not having to rely on a paycheck, and not having to wake up and hit my not having to have an alarm go off at 5:30 every morning for the next 20 years, 30, 40 years. So I definitely agree.
Yeah, I mean, thinking about it, every time I hear somebody describe this, what outsiders perceive is that we just want to sit on the couch. And I think that's what all the outsiders always perceive. They're like, we don't want to be relying on a paycheck. And so I think when I understand 100% what you're saying. What I hear that as is, I want to spend a month going to travel and seeing stuff that I haven't been able to do before, but then come home for a month and then create some other business that, I have thought about doing a million times, but always gets put back on the to-do list. Or, really jump into real estate and not have to worry about whether or not it's going to work or not, because at the end of the day, I don't need it to work anymore, but it's something that I've always envisioned myself getting into. So, it's that sort of stuff where you can start living your passions, or what you've thought you've been able to, or you wanted to do in the past, and realize and make yourself a better person based off the fact that maybe that isn't what you actually thought it was going to be like. So you can get out of it, no harm, no foul, because you've become a better person in your search for being able to create your own financial success, if that sort of makes sense. But transitioning into the comment that's on the screen here, we had the dividend experiment asking, and there was some conversation going on whether or not, if you were to invest in real estate, would you utilize a property manager, or would you kind of do it on your own to to maximize the amount of money that you're getting from your investment?
So for me, I would definitely have a property manager, at least in the beginning, just to see, um, basically how it would work, how it works compared to not having one. Because when you have a property manager, you're paying them for a service, and their service is to find you renters. If there's a problem with the um, if you have anything that breaks down, um, they have reliable people that they have a good reputation, a good relationship with, that they trust, and that will do a good job for and be honest for fixing your property. And in part of that, in part of having a property manager, you obviously have to do your homework and see which one you want to work with. But I think most property managers pay charge around 10%. I could be wrong, but I believe it's around 10%. And for me, the 10, I would definitely rather pay that 10% for the peace of mind that they're getting tenants into my house, and I have reliable people that I could call on if I needed them. So I would definitely have a property management company, for sure.
No, I think that's 100% probably where I would end up going with my personal investments. Is I would probably want to get to the place where I'm making a decent enough money from it that, I don't need to, I guess, how do I say this? I don't need to get every single last penny out of my real estate. I'd rather, like you said, get my time back, and I'd give up 10% of the potential gross margin based off the fact that I'd be able to have more time. And I've actually grown up in a family business that invested in multifamily real estate in the past, and currently, actually. And what I recognize is they actively manage the real estate, and they might contract out some things as well, but they're the ones collecting the paychecks. Or not the paychecks, the rent checks. They're the ones making, the tours. They're the ones giving the showings. And in my opinion, as a person from an outside perspective, kind of looking in, not being in that business, but kind of having this lens of looking at it as I've grown up, and also, not really working for that business, I personally have made suggestions as to, I would do X, Y, or Z, and sometimes it's met with a lot of criticism, which I've kind of stepped away from. I don't want to overstep my boundaries in terms of how the family runs their business. Obviously, they think that that's the best way to go about doing it, but yeah, I mean, I personally would like to go more of the triple net lease sort of route, where, it's kind of either taken care of, whether it's by property manager, and all I ever have to really worry about is managing the contracts long term. That person's going to be there for 15 years. They're going to take care of the property management. They're going to take care of the property tax. They're going to take care of the renovations of the buildings and stuff like that. All I ever have to really be called about is if the building, burns down or something like that. So, but yeah, I mean, so are you specifically going to be looking into long-term for real estate, single family, multifamily, or commercial?
So I think just because I would be brand new to actually real estate rental properties, I think that education-wise or knowledge-wise, it would be better for me to go with a single family property or one or two. But just like Grant Cardone says, or Bigger Pockets, it's easier to make more money on your dollar with the more doors that you have. So I think that I would definitely transition into multi doors, so apartments. But I would have to I would have to do it slowly and strategically. But yeah, my goal would be to, multifamily, condos, apartment complexes, but smaller ones. I'm not going to
Yeah.
be getting into anything like Grant Cardone has with 600 doors. But
Well, you never know, man. I mean, you're only 28, so uh, you're more well off, I assume, than most. So
yeah, so for me, getting into the multifamily or the multi doors, it would be a learning curve. So I would just have to learn how to do it basically, and that would be my biggest hurdle. Would be just getting my feet wet. You know what I mean? Getting my foot in the door and just seeing how that works, because for me it's a lot more intimidating just thinking about apartment complexes compared to single family homes. So I haven't really thought too much of commercial, but for what I'm thinking long term would be, like I said, just apartment complexes or multifamily. So
it's interesting. So, is there any questions you have for me? I'm trying to prompt the audience here to see if they have any questions for you as well. Um, before we sign off, I offered some folks. We had another gentleman kind of join, but unfortunately he had kids that wouldn't go to sleep. So I understand and can relate to that. So I can understand that. Well, I can't relate personally, but I can understand and sympathize with him that he had to run. But yeah, any questions for me or the audience? Do you have any questions for Jesse? Jesse, do you have any questions for me?
okay, so my question for you would be basically, you said that you get into single family to start off with, and then kind of transition into bigger, more doors. Is that correct?
Oh man, I mean, I
And
I haven't figured that
if
out yet. Yeah.
okay, so if so, how would you how would you navigate that? Because I'm just trying to think of how how you can go from single family and just start onto
Multifamily.
um, exactly. How would you kind of um, handle that situation?
The thing that I like most, and so I don't know if apologies if, and feel free to ask me any terms. I'm still educating myself on it as well, so I don't necessarily know everything about multifamily real estate. So disclaimer that the thing that I enjoy most about multifamily or commercial property rather than investing in single family homes is kind of what we talked about earlier, is the aspect of single family homes. Most of the time you're competing against the people that want to buy those potential homes to live in. The thing that I like most about multifamily, which was why I'm almost like tempted to do what Grant and other people are doing, which is starting at either 32 units or 100 unit sort of properties and save my money until I get to that point, is because once you get to that point, you're purchasing the property on the income aspects of the property. So for instance, let's just make the numbers pretty simple. You're able to purchase a property for $1 million and it makes $50,000 a year in income. It has a cap rate, or the money that you're actually getting into your pocket for what you paid for it, of 5%. So you paid $1 million, you're getting $50,000 a year, and you would probably know that just reading Bigger Pockets and stuff like that. So you're probably familiar with that already. So that means if you were able to increase that $50,000 a year that you're getting from the property, whether it's like installing laundry machines or now making the tenants pay for electricity instead of you paying for it, and you're able to say increase that now to $60,000 a year the following year, that property is still probably going to go at a 5% cap rate. So you immediately just increase the property value by $200,000. And not only are you getting the extra $10,000 a year, but if you wanted to, you could take out, depending on how much equity you already have in that property, you could take out that $200,000 and go buy another apartment complex or what have you. I mean, so the thought is like you could potentially do that with single family homes, and obviously everyone knows about flipping homes, but I feel like it's more difficult to do that, and you end up needing a lot more um, total capital as a total percentage of the value of that home, let's say. So say the home is worth, say, $300,000. You end up needing to put in like 15 to 20% of that home's value, $40 to $50,000, to like completely renovate it. Yes, you might be able to, say, increase the value of the home by X, Y, or Z, but it just, in my opinion, it just seems more hard work than sometimes the multifamily aspect of things are very simple tweaks. Like I've listened to things on Bigger Pockets, and they were like, we bought washing machines for the in units, so we put laundry hookups in every single unit instead of having an individual laundry machine, and we were able to increase rents by like $100 a month or something like that. And so we were able to pay off all those laundry machines and the hookups within a year, but also it increased our rent roll. So it's like we were able to pay it off very much sooner because we obviously can take whatever we now got the rent roll up by, say it's $1,000, and we can now charge $20,000 more for the project because it's a 5% cap rate, or maybe it's a 10%. Maybe you can only charge what is that, $10,000 extra for the property. But that sort of like finagling and financial, I don't want to say financial engineering because that makes it seem scammy, but that sort of thought process excites me more than the single family aspect of things. And personally, where I'm at, did my computer die? No, we're good. For some reason, my computer froze. Personally, where I'm at, the portfolio size at this point is just under $400,000. If I wanted to, I could purchase an apartment complex now, a very small one. Maybe depending on where in the country, it could be a little bit bigger. But obviously, with $400,000, I probably couldn't go to California, in LA or something, and buy a very big apartment complex. But if I wanted to, in my opinion, it would. I don't want to say it would be as taking a step back going to single family homes, but I feel like with where I'm trying to get to in terms of the playing field, going from, say, $50,000 a year in passive income to wanting to get to my ultimate goals, which is probably closer to like $1 million a year in passive income, or maybe not passive income, but income off of my own businesses. And actually, like, the ultimate goal would be closer to $1 million a month. I mean, that's the ultimate goal. If I were to really like dig deep, I would have to really start elevating my investments, and doing it with single family would be a good way to preserve wealth, which is kind of what we were talking about very early on. But I think in terms of getting to the point where I want the income to scream and go a lot bigger, I feel like it would take a lot longer with single family homes. So that was a very long answer, but hopefully it was insightful.
Yeah, it definitely was. It definitely was. So for me, the issue that I have in my head when I think about investing in apartments is, so for a residential house, you need obviously 20% down. I'm not sure how that works with apartment complexes. Do you still need the 20% down? And not just that, but you're also going to have the income. So if you're a self-employed individual, it's going to be a lot harder for you to get a loan from a bank than if you were a W-2 employee with a high income. So your debt and also your debt to income ratio needs to be low enough in order for you to get a loan on an apartment complex. So maybe it would be wise to bring in other investors that you could go in on the deal with. But like Grant Cardone says, that it's not wise to just drop the other. He doesn't say drop the investors per se, but he says that if you're going to go in on a property with a friend or something, why not just go with investors? So that's kind of my headspace is, do you still need the 20% down? You know what I mean?
You
And our
definitely
banks.
need some sort. Sorry, I cut you off. Or our banks what?
Go ahead.
Were you going to say are our banks more lenient when it's a commercial property? Was that your thought?
Yeah. That's what I was going to be leaning to. Is our bank's going to be more open or more likely to give you a loan on a property, since it's going to be it's obviously going to be generating more income from all the doors.
That was
So
my understanding when I've talked to people in the past is, yes, you'll still need 25% or so down from what I've heard. And sometimes what I've heard is if you're relatively new, they might require more, like 30, 35%. But if you're more a seasoned investor, they're more comfortable getting, say, 25% because, yes, you have, potential income coming from the property. So while it does suck, what the bank is basically trying to do is take that 20-25%. So in the case of any sort of issues, they can sell it or at a quick sale and not really get too hung up on the aspect that they have to sell it, quote unquote, at a loss. But even still, they've got your 20-25% that they can kind of take off the property, and then they end up making money. But from what I've heard from investors and just listening to Bigger Pockets and stuff like that, is the banks are more willing to give you the money on some of these commercial deals than they are on single family homes, because single family homes, generally speaking, they can't necessarily make income off of. Yes, they can, as people put renters and stuff in them, but the primary use of them is people living in them to live, not to rent out, if that makes sense. So generally speaking, from what I've understood is, the primary use of these multifamily homes is, yes, people live in it, but the people that own the multifamily homes are doing it for income reasons. And so I feel like that's kind of the drawing for me is it's like you're buying the property at that point for its best use. But yeah, that's the big deal is you do need 25% of something a lot bigger. And so the cost to entry for multifamily and commercial, I feel like is much higher than, say, single family. But maybe not necessarily commercial. Commercial, I feel like, can also be relatively cheap if you, say, buy, a small strip mall or something like that. I've seen those for, under $1 million. But even still, you think about it, you'd probably need 250 or so thousand to make that even something a viable product that you would actually put your name on and actually get a loan for. So it's difficult. Yeah, I mean, but I don't think the debt to income really plays a factor, because you mentioned that. I don't think the debt to income really plays a factor. Maybe on your first property, because if you're a new investor, you might not necessarily know what you were doing. But I think maybe other people on the chat have more insight than I do. But I feel like once you get the income in the commercial property and they're able to see that cash flows, then that kind of takes precedence over the fact of what your debt to income is. Now, of course, if you're up to your eyeballs in debt, maybe that would then become more relevant. But I feel like people will always give you money if it makes money at the end of the day, as long as they're able to kind of get the mortgage paid on it. So, but the one thing that is scary about the commercial ones that I have seen is, generally speaking, they're not like 30-year or 15-year fixed mortgages. Some of them are like they force you to take, adjustable rates or balloon payments and stuff like that. And that's the big scary part for me, is I'm able to comprehend the 15, 30-year fixed rate stuff. And that's kind of what like entices me about the single family home stuff. It's, you go into the payments knowing what they're going to be, and maybe it changes with respect to maintenance costs or taxes that might go up every year, but the mortgage is always going to be the same for the next 15, 20, 30 years. But like with some of these adjustable rate mortgages that sometimes they make you sign, it makes it seem more difficult for the commercial aspect of things. It makes it seem like, I don't know, it makes it seem rare that fixed payments are normal in commercial property. So I hope somebody can prove me wrong on that. That would be really nice. Yeah. But we did have a question for you. Would you rather consider buying property in the U.S. or abroad?
So at this point, all that I know is property in the U.S. I have no clue what's going on in the rest of the world when it comes to property wise. Um, so for now, I would stick to the U.S. But maybe after in a few years from now, or after I get a couple years under my belt, I would start looking into other markets. Yeah, but for now, I would definitely, I would consider it when I get to the point where I have enough knowledge to make an educated decision on that. But
yeah, I've thought about that as well. As if part of my goal, hopefully, is to increase my travel experience, and if I find a place that I really truly enjoy, would I be confident in potentially, buying a house in, say, Indonesia or something like that, and rent it out for most of the time, but be able to go there 2 to 3 weeks a year, and also still use it sort of as an investment property. I don't know. I've thought about that as well, but I have no plan for that. It's something that I've thought about, but there's obviously no plan in play, if that makes any sense.
I definitely agree. And for me, part of the thing that would be scary investing in other countries is how you obviously don't know their laws. You don't know their taxes. You don't know what you would have to. You don't know the. I mean, for me, I don't know the legal actions it would take to evict a renter if they're not paying their mortgage. I don't know the I don't know if those people care about the house that they live in. When over here in where I live, you can kind of get an idea of how people appreciate their property based off of just if they take care of their stuff, So, and also, how would that work for owning a property in another country, having income from that property? How would that work whenever it comes to taxes on United States taxes? So that's kind of my thing. But yeah, I would just have to continue to educate myself and learn, and for sure. But
no, that's really good insight. Hopefully, I get a little bit more knowledge about how taxes from when you're working in a different country or happen when you kind of become back a U.S. citizen, because I'll have to deal with that in 2019 taxes and also 2020 taxes. So I'm curious what sort of insights I'll get just from that process. But yeah, is there any other topics you want to bring up? It looks like that was really the only big question that we had on there. There was some debate here about how much it costs for property management fees. Somebody somewhere quoted 30%, which everyone started getting a little curious about. Most people were typing in anywhere between 8 to 12%. But yeah, just curious, how long have you been following my channel before we signed up?
I believe that I've been following your channel for, you had maybe like 600 or 700 subscribers.
Okay.
I know that you had over 1,000 at one point. Then you went back down to under 1,000 because you weren't making as much content. But I'm not sure what the timeline would be on that. But it's been a couple of years, maybe a year and a half, 2 years. So it's been a while.
Yeah.
And it's funny. Yeah, it's funny because I actually saw I was on one of PPC Ian's videos, and I was looking at the comments, and I saw one of your comments on his video, which I thought was pretty interesting, and it just makes me realize how much everybody follows each other and it kind of learns from other people. So that's
Yeah,
pretty cool.
so there's, at least in the younger, or maybe not the younger, the less popular YouTube finance community. It's generally very, I don't want to say clicky, but we definitely follow each other a lot. But PPC Ian is one of those folks that he has a big following, and so I'm sure he has a lot of people reaching out to him to really try to interview him or anything. So I've tried reaching out to him several times, and even to Dividend Grinder, I've tried reaching out to him a million times to be like, "Hey man, get me on your podcast." And he probably is working, and then he probably comes home and has his 35 minutes that he has, and he probably doesn't want to deal with someone like me who sometimes will go on for an hour and a half, 2 hours, kind of like what we're doing right now. So that's probably why he doesn't do it, or he just has his particular topics. And I like listening to him though. He's a good talker. So
Yeah, he definitely is. I've watched him for a while too, but I am gonna have to cut it short pretty quickly because my phone's fixing to die. But
no worries, man. I appreciate it. I was only planning on having you on for 15, 20 minutes, but yeah, if you have any feedback, let me know on Facebook, because I know I was talking to you on Facebook beforehand. But really appreciate you stopping on. I'm probably gonna let you go, and then I'll probably end up talking to some folks and see if they have any other questions before I cut the live stream. But really appreciate you coming on and talking to me about cryptocurrency and real estate investing. It was a good time.
I definitely agree. I want to thank you for letting me on your podcast,
Yeah.
and I appreciate the content that you make. And I also want to say that it seems like just about a year ago you had posted a video of your portfolio reaching 300,000, and it's getting near 370. So that's like close to $70,000 in 1 year, which is astronomical. And I envy you, and I also wish you success. And I'm happy to see you moving forward as well. So
Yeah, thank you, and congrats on your success so early. We're at the same age, man. So the fact that you're doing so well at your age is phenomenal. So
I definitely agree for both of us. But yep, thanks for having me on, and maybe we can chat again sometime.
yeah, man, keep in touch. I'll talk to you soon.
Okay, thanks.
Cheers. All right, guys. Well, I really appreciate you guys stopping by this stream. It was different. I really hope that this was useful for you guys, hearing some of the other perspectives. A lot of times, like Jesse was mentioning there, we kind of have a very tight YouTube community, and we don't really get to see outside of the box, hear from some of the strangers, or now a lot of times a lot of these people become community members and friends. But yeah, really, really interesting take, and it took a lot of different discussions. I was really expecting to really hit home about, say, dividend investing, how do I get started investing, and stuff like that. And I appreciate that we only got 2 out of the 4 calls. The one guy, unfortunately, he had to leave. He was on waiting for about 2 or 3 minutes, and then I saw him sign off, and he messaged me on Facebook. And while I was talking to John, I was able to respond back to him. So hopefully in an upcoming week or so, I'll be able to have him on. But yeah, I'm before we sign off, I'm really trying to get my best to get All Good on a call, even if she just comes on and chats with us over the computer. I would love to have that, or if anybody else that has joined of the 15 of you would love to hop on for a quick minute, have a good conversation. Camera, no camera. We've had both of our callers tonight have no camera. But otherwise, I'll just probably go back and see if there's any questions I can answer. I saw All Good obviously join Dividend Experiment. Thank you for joining us from Korea, I believe. And then Maria Norris also joined us as well. Thank you, guys. There's no need to sign up when you click on the Streamline thing. All you'd have to do is, allow it to either access your microphone or your camera if you're willing to show your face. But yes, if we get All Good on here, I will tell everybody what I do for a living. if as long as All Good comes online, and that's all I say. At this point, we're competing up against JMac Investing, so appreciate that. I kind of ran into his typical Wednesday spot. So if I were to do this again, I'd have to find my own time, because I feel bad, because I really enjoy JMac's spot, and I don't know if I remember who exactly he was bringing onto his channel. But like I said, if anybody's interested, more than happy to chat with anybody for maybe 15, 20 more minutes or so. But otherwise, I'm just going to get back into some of the questions. There's only really one at the moment, and it's Hidden Freedom Investing asking me, what do I think of Cheniere Energy as an investment? So I want to really ask a clarification questions, and you'll join me next time. All good. You're breaking my heart, girl. I'll have to come visit you when I come to Houston. I have some meetings I have to go to, and I'm going to have to visit you and Katie and buy you a coffee and figure out a way to get you on a live stream or an interview or something. Curious what you mean Hidden Freedom Investing by Cheniere Energy. Do you mean Cheniere Energy Partners, or ticker symbol CQP? Or do you mean LNG, which is the mother company, I guess, of the entire sort of thing? So if you can help clarify that, I would be interested in. I personally am a shareholder of CQP, which is Cheniere Energy Partners. And what that is it's the actual partnership that owns the Sabina Pass, I believe it's Sabina Pass LNG plant in Louisiana, right off the Texas-Louisiana border. And what that did is they basically originally were going to be or you're asking which one I would invest in. I'll get into that, actually. This probably will lead directly into that. So LNG and CQP, the difference is one is the mother company and one is a partnership company that invests specifically in Sabina Pass LNG plant. So I have driven past the Sabina Pass LNG plant coming back from, Gulf Coast trips, hanging out on the lakes and stuff in Louisiana, going back to Houston, and really cool facility. Seeing it lit up at night, I mean, that's some cool stuff. So I almost was about to get into too much details, but I like CQP because it pays a good dividend. I know that the money is going to be there. It's cash flow positive. They come up with long-term contracts. They sell it at about a 15% premium of what they sell. Whatever goes out of the plant at a 15% premium compared to whatever spot price is. So what they have it set up that they're always going to be making a 15% margin on whatever they sell. So in that respect, the money's there. The thing that I dislike about CQP is I was hoping with all this Corpus Christi LNG plant starting to come up and the building of that and potential other land that Cheniere Energy is planning on buying either near Sabina Pass or near Corpus Christi, or maybe even further down along the coast in Texas. Cheniere Energy Partners doesn't get ownership in that. So you're kind of giving up potential income now from something that is currently stable and has increasing revenue streams, although recently the revenue streams have gone down, or not maybe revenue streams, but the distributable cash flow have gone down in Cheniere Energy Partners because of increasing operating expenditures. But you'll see trains 5 and 6 come online in the next couple of years, and at that point you're kind of running at full capacity for CQP in terms of distributable cash flow, unless they get a way to decrease operating expenditures and increase operating efficiencies with the plant. The thing about LNG is that it owns the majority partnership of CQP, and also when you buy LNG, you get the other LNG facilities like Corpus Christi and some of the other projects that I believe Cheniere is working on. I want to say they're trying to open up a third LNG train facility, but maybe Hidden Freedom Investing has a greater insight on that. So that's really where I'm at. It's either you're kind of trying to get the income now through CQP with something that's a little bit more steady. The money's there. I would have said 5 years ago it's pretty risky, but once it really started to get into fruition, that train 2 came online, train 3 came online, and the distributed cash flow was really starting to come into its own. That seemed like a worthy investment. It seemed undervalued in the mid 30s, which I believe is when I bought it. Now it's in the low 40s or so. So I have a little bit of a cash cushion. But I believe I'm still reinvesting that, even though I don't reinvest any of my energy positions anymore because that's such a large portion of the portfolio. But I think if you're looking for something as a long-term play, LNG, the ticker symbol, is probably one of the better ones to invest in. But if you're looking at money right now and cash flow right now, I like CQP, but I probably would wait for it to maybe come down a little bit more before I purchased some. But I have a couple hundred, no, just 100 and some shares of it, so just under $6,000 worth, and it pays me, I don't have it open right now, but it pays me a decent chunk of change. Let me see if I can pull it up really quickly here for you guys. So don't care about that one. This is my stocks. This is all I care about here. So CQP, currently own 127 shares. Oh, it's dropped down in 38 bucks. I would buy it. If I had cash, I'd buy some. My cost base is around 36 bucks. So at 38 bucks, it's a pretty good steal. Total dividend for me at the moment is 317 a year. So that's pretty good, just under 90 bucks. So it's good enough for me to buy 2 shares about if I were to reinvest. So originally bought 123 shares. I'm up to almost 129 shares with dividend reinvestment. So hopefully that was a good enough answer for you there. Still waiting for All Good to join us here on the stream. Nothing yet. But if any of you are interested to get on here, no need to show your face or anything like that. Would love to have the conversation and would love to have people hear your story. The outside perspectives, I believe, tonight have been very refreshing. We had a gentleman named John come on. He's a real estate investor. He's lived all over the country. He had a really interesting predicament. He has equity shares in a company that went public, and he was asking about how he kind of offsets some of the fact that he has a large amount of his net worth within that, and he wants to progress into more of a dividend, steady cash flow lifestyle rather than specifically having this large amount of net worth in this company. But he also believes that that company stock is currently very undervalued. And so it was a very interesting conversation we had with him, and hopefully be able to start a relationship with him. I have more of an stock investment background, but I want to get more into real estate. He obviously has a lot of real estate background, or a decent amount. He's got 4 properties or so. So he's a pretty decent investor in terms of real estate, getting around $1,800 a month or so in cash flow, hoping to get more from the dividend aspect of things. So, and then we just had Jesse on. He's a cryptocurrency investor, so that was interesting to bring to the channel, and we had a little bit of an insight on that. So All Good is on, guys. I'm not lying to you. I don't know how I finagle this, or somebody is lying to me, and I don't know. Hopefully, this is actually All Good. Let's see. We're bringing him on.
I'm getting a
lot.
lot.
Oh my God! It's actually her. All Good. How are you?
I'm fine.
Oh my God!
You make me nervous.
Oh, I'm so sorry. You have an accent. That's awesome. Where's your accent from?
Yes, I'm from Pakistan.
That's so cool.
Well, my parents were from India. I know you love Indian food, and I will cook you.
I do.
Yes, a lot.
So now that I know that you're Pakistani, what's your favorite Pakistani place in the Houston area?
It's got what's it called? Kebab House. Have you heard of Kebab House?
I haven't.
It is on Mason Road. It's in Katy area where I am, and let's see, it's delicious. They're kind of, if you can stand spicy food, which I think you do, you can, you'd love it. So that's right around, yeah.
So yeah, on the 16th or so, I'm going to be heading back for some meetings. So if I tell you where I live, you'll probably know what company I work for. So you just can't promise to tell anybody else. Actually, no, I did promise that if Hidden Freedom Investing got you to come online, I would tell people what I do. But maybe we could reveal that a little bit later. Do you want to tell people where you are in your investing career? And I'm so flabbergasted that you actually came on. This makes me so happy.
Well, yeah, I was. I broke down. I said, "Well, might as well." You called out my name so many times, so I said, I might as well just get it over with. That it will be hanging on me. But my investment career is really nothing to see. That's the problem. I don't have any content, nothing to share much, because I am 65, and I started when I got some money as from my dad's side. It's kind of like, oh gosh, I'm nervous. What's that word? It's when my dad died, he gave us. Oh, come on, I'm so nervous. Like, inheritance. Yes, that's. I was sharing with that with Dave and Gen X on the Discord chat, and now I'm just kind of so nervous. Anyways, yeah, I had some inheritance, so my siblings, they all blew it, but I did not touch the principal. I invested in the stock market, not knowing what I was doing. But a friend of ours said, "You don't know what you're doing, so start with ETFs." So I just picked up a bunch of ETFs, which I did not know what I was doing. And ever since then, and then Vanguard will not allow you, it's not commission free with single stocks. If you invest with Vanguard ETFs, that's for free. So being El Cheapo that I am, I said, I'm not paying a single penny for any commission. So I got all the Vanguard ETFs, and I made pretty good money, except the VDE, which is the energy ETF, right? Because my husband is a petroleum engineer. So I said, oh, and he made good money. I said, I'm going to make good money on that. But I was getting in, stupid me, I was getting in when everybody else was getting out. It was 2015, and it went, I paid so much for it that it went down, down, down. And I'm now like, I'm big time enough, I'm all red in there. So I'm waiting for it to pick up so that I can sell it. Other than that, then I got into then M1 Finance, and Robinhood came along, and I said, and that's just like 6 months ago, I got into Robinhood, commission free. Then I got some single stocks there, and sold most of them because I got scared. I'm more comfortable with ETFs. And that's pretty much it. I have, I'm Bank of America, Triple M, Altria, AbbVie, just on my fingertips, I can say, and Eaton Vance. They're all good dividend-paying stocks, and the rest are all, ETFs like SPHD, DGRO, some bonds, lots of bonds in there, because I'm old. I don't want to kind of, risk it. So that's pretty much it, and I'm loving it, and I love your show, and I love that you come visit, and you regularly, or whenever you come to Houston. So that was a kind of like a rapport with you, and everybody else, like Gen X and Hidden Freedom. Their content is so much, I learned so much from them. Yeah, I learned so much, because I don't know anything. You are the young kids that I learned from. So,
well,
yeah.
I honestly have so many questions for you. I mean, I think that you have a perspective that I think a lot of folks probably wouldn't have. And my parents are around your age as well. They're getting around to that age. And so I have this conversation with them a lot. They say, well, what are you doing with your investments? And I'm like, well, I'm in a very different time horizon. I have, 20, 30 years additionally to invest. And so I'm just going to keep investing, right? But you're in a different horizon. I mean, in 1 to 2 years, you might actually really need that money. So I'm curious what your investing strategy is, knowing that a potential recession might be coming, and you are in a potential you have a less of a time horizon where you might actually need the money. So I'd love to hear your perspective on that.
Okay, now in that situation, it's very different. My situation is different because my husband is the one who really pays all the bills, and he has achieved by scrimping and saving and being very frugal. We have achieved the fired stage. We
Yeah.
have, we are comfortably off. We don't waste money. I drive a 25-year-old Lexus, which he bought new for me like 25 years ago, and it still runs very well because he takes care of it. But we don't live very lavishly. So there's money. Now the money I invest, that he says that's your money, your dad's, your inheritance, I have nothing to do with it. But he's old school. He does not want me to invest. He says, you'll get burned, blah blah blah. I said, no, let me try it, and I did good. So it was like, see, I could do it as a woman, and as a homemaker. I never worked in my life. uh, I made pretty good money. So he's like, he does not like it. He's like quiet about it. And now I'm telling him, invest in there. He's just sitting with CDs, and we just, the income from CDs, what we kind of live on, and it's pretty comfortable,
Yeah.
that way.
Well, I mean,
So that.
so I'm assuming you're very similar in age. So at this point, CDs might not, if you're able to live a comfortable lifestyle even off of interest from CDs. I mean, maybe it's not a bad thought either. But I think that a lot of the companies that you're investing in, 3M, Altria Group, and some of the ETFs that you're investing in, I mean, those pay a similar sort of yield. Say the S&P 500 probably pays a similar yield to some of the CDs that he's getting. So in that respect, it's almost like you can't go wrong either way. Generally speaking, the S&P 500, even in a very poor performing market like in 2008, was still paying out 80% of the dividends that it paid out the year before. So, I mean, I don't think that you are in a bad situation. You also said you had a decent amount of bonds as well. It's very interesting. It's awesome.
Yes. So I'm okay with it, but still I've got a long ways to go to learn, some of the stuff that I'm still not sure about. But yeah, but I was not interested in just going in S&P 500 or just in one, like VOO, VTI, and not have hands-on. It's fun to see how the market goes up, and you invest in like single stocks and ETFs, and then sometimes it goes down. So it's kind of like, but ever since I discovered you young guys, and I've learned so much. So I've become more confident. Otherwise it was like a lonely world, for since 2013 I have been investing, and it was so lonely because when the oil market went down and my VD just really did bad, I had nobody to talk to. So now everybody is in that boat. People who have invested, that you are the first one who showed your pie, and a huge chunk of it is in energy. And I said, oh my God, he's invested in energy. So I used to keep, asking you how you're doing with that, and how you're doing with your energy, because it's a big chunk of investment. So that gives me so much hope that if you are still invested, and it's people say it's going to come back up. So that is something that makes me feel better about my investment, and I don't feel like I'm so stupid. I did a stupid thing to invest in stock market.
Yeah, well, so you could probably start putting two and two together at this point. So I invest a lot in energy. I used to live in Houston. You already mentioned that your husband's a petroleum engineer. I'm a petroleum engineer as well.
Oh my gosh,
Yeah,
yes.
so
Awesome.
it probably makes a lot of more sense now as to why I generally, when people ask me stuff about Exxon or BP or Shell, I have a little bit more knowledge around what a good investment might be. So I obviously don't want to really say at this moment what company it is or anything like that, but you probably will know. I used to work on the building is on the corner of 6 and Highway 10, I-10. So you probably know what company that is just by knowing where it's located. So it's not downtown or anything like that. So
okay.
but
I think I have an idea. I'm still kind of Well, I'm going to ask my husband. He will know for sure. I'm not, I don't look at buildings. So it's I-10 and Highway 6.
Highway 6, yeah.
Oh, okay. I think I got it.
Yeah,
Yes.
yeah. So it probably makes a little bit more sense. And I'm always curious. A lot of folks that I know that invest in energy stocks have always, and I'm curious now because you said that you're down so much on it. I know a lot of people that when the downturn happened in 2014, 2015 timeframe, they were so much concentrating on investing in the broader energy market. I was more so trying to find I don't want to say diamonds in the rough because a lot of them aren't really in the rough. I mean, I was focusing on investing in, say, Exxon's, your Shell's, your BP's at the right time. And so I feel like overall, I believe I'm way up in terms of my positions. Some of the positions I don't really have a dictation as to when I can purchase them because I get some of them through work as well. And so those ones I kind of just take whenever I can get them through work. But most of the time when I'm able to be very, very selective, I mean, I think I'm currently even on a lot of my Exxon shares, my Shell shares. I have a decent amount of money on, and we just looked at the CQP shares. I'm up a little bit on that, but in terms of total returns with dividend reinvesting and stuff like that, I'm up as well. So maybe it's just the fortunate way that I've been investing over the past 4 or 5 years or so that has allowed me to do that. But I think what ends up happening is there are some companies that have obviously gone bankrupt over this. I mean, the oil price going down and a lot of people investing through the inflationary periods of the 2012, 2013, 2014 when the price was continuing to go between $80 and $100 a barrel. And unfortunately, people doing that, the service companies are able to obviously charge a higher premium. And so that ends up shrinking people's margins and their break-even costs obviously goes up. And so people are all competing against each other. And then eventually the price goes down and, the people that don't have the cash and are really built on, I don't want to say a pile of or a house of cards, but unfortunately in some cases, they're expanding their empire by getting all this debt. And unfortunately, they just can't make the interest payments now because the landscape really dried up. And so, yeah, I think that is probably the big reason why VDE and a lot of these energy sector ETFs have really gone downhill. And that and well, I guess I can't say that I'm wholly out of the woods because I did lose money on Chesapeake Energy, and I've also lost money on Seadrill Partners, the driller. So I guess I can't say I'm fully out of the woods and I'm fully even on energy stock, but I'd say as a whole, it's not down too much in terms of the overall position. But I'd be curious to look at it as an overall position, how much I'm down. That brings up a good point. So.
Yeah. So you think it will ever, like ExxonMobil is the number one holding, and then I keep asking everybody about about this because and then Chevron, and then they have ConocoPhillips. Do you think oil will ever go up to where we can all get in the green and not the way everybody's losing on it?
You mean in terms of stock or the actual companies themselves being profitable?
Well, the stock, for one, yeah, the company stock, like Exxon and all. Do you think it will ever kind of
go back to where it was in the $90, $100 range?
Yeah.
I honestly don't know. I mean, it's difficult, and that's why, generally speaking, what I'll do is when I'll wait until it kind of pulls back in these times where it gets into the $60 range because I'm comfortable. The financials make sense in these sort of ranges, but even when it was in the $80, $90 range in the 2014 timeframe, it wasn't really making sense to me. And so when I was seeing people invest in those companies, even BP and Shell, when BP was in the mid 50s and Shell was in like the $80 range, I was really not understanding why people were putting so much of their money into it, just because maybe I was being conscious of the fact that it is cyclical. And granted, I haven't been through a cycle like this. I mean, obviously I came into the industry in 2012, 2013 when I graduated from school. And so being able to, kind of see when it was in the glory days of 2012, 2013, go into 2014, and the price and the market starts drying up in terms of resources. I don't have a predictor, but I think what will end up happening is the market's very different now with respect to technology and stuff like that, with energy stocks. So I honestly don't know. And now that you're in this very large transitionary world where, yes, oil and gas will go up at a rate of 2% a year in terms of growth, you also have the fact that like these renewables are growing at double, maybe even 3 times the rate, 5, 6, sometimes up to 10%. So it's very different, very interesting.
Yeah.
I can't say. I really wish I knew. I personally am banking on the fact that hopefully they'll continue to be able to pay the dividends. I'm a big investor in Exxon, BP, Shell, Cheniere Energy Partners, Kinder Morgan, a couple other energy stocks that I'm probably not remembering off the top of my head. But like I said, I mean, I get, of that $11-ish thousand a year that I'm getting in dividends, it'll be probably around 3,000 to 3,500 of that coming from energy stocks. So I'm hoping that in the long term they do well, and at least maybe not get green, but they'll pay the dividend, and that's more so what I'm concerned about.
Exactly. Yes, that's true. That's true.
So I'm curious if I'm sure a lot of people have asked, want to know a lot of questions. I'm sure everyone sees you, and you're always so good about going on everyone's live streams. I'm like astonished that like you are able to keep up with everybody. I'm super impressed.
Well, the reason is, Matt, that I don't work. I'm home all the time, and investing is something that I enjoy so much, and I'm on YouTube a lot. So. And I'm a live stream junkie whenever I can catch one, especially on. So I'm just there. And today, what happened was I was late on JMac, and then all of a sudden, your this thing on my feed popped up, and I said, "Oh my God, he's live too." So I was, and then you called out my name, so I said, "Okay, well, I'm going to stay with you."
Yeah.
And but I was actually on phone with my sister, so I missed out lots of JMac, the live stream, and yours too, most of it. But I was there. I mean, it was something that I could not avoid because there was just some family thing going on. So that's the reason. But yeah, I will always be there. I'm always on the lookout now. Who's having that next live stream? And I'm right there. In fact, I was telling Gen X, I said, Monday is one slot that nobody's has taken where there's no live stream. Then Tuesday, Wednesday, somebody's always there, And then of course Friday is Ryan, independent investor, and right. I just love that guy. He's just so awesome, so straightforward. Just right there, he'll give it to you straight. So, and then Saturday is what's his name? Rico Suave, yeah, Jose, and so on and so forth. So I'm always looking for live streams. That's why I'm there, and I'll always be there. You'll always find me there, commenting and supporting you guys, and anything that I can. That's the reason I came on right now. I said, I mean, I have to support you, and I have to get on there because you've been, wanting me to be on your live chat. So here I was.
Well, yeah, I mean, you're such a vital part of our community, and you're very lively, and
oh my God.
And so, and that being said, like a lot of the people that are in here are, I don't want to say they're trying to promote the channel, but they're trying to promote the community. So people like Hidden Freedom Investing, Gen X Dividend Investor, we're all, kind of become some sort of camaraderie, but these guys are distributing content. And so it's interesting to see someone that's always so involved, but yet doesn't have a channel. And I personally am waiting for you to buy your camera and start doing your screencasts for us to see your portfolio. But I'm just messing with you. But
oh my gosh,
it's great to see you and finally put put a voice to the name and get a little bit more connected with you. And
Yes.
yeah,
Yes, I love it too. I love it too. Believe me, it's been, it's an honor for you to, have me on here, really,
yeah.
because I'm basically, just even this few people that know me is just like an honor. You're young kids, you're interested in that old lady like me. It's like, oh my gosh.
Well, you got a lot of experience and you have a different perspective, and so like you just bringing that on is extremely vital for us folks because in very short time, as you'll probably know, we'll be where you are, and we'll need that sort of perspective and mindset to be successful when we go from, say, building our portfolios to maintaining them for income in the future. So
Sure, yeah, anytime. Yeah, I sometimes I talk with Dave, and I'm telling him, oh, do this and do that. We talk about different topics, and it's so much fun, and he gives me so much attention. So does Gen X. So and you are all there wanting to talk to me. Gosh, it's unbelievable. I can't believe it.
So I'm
Yeah, but
curious,
anytime.
do you have any questions for me or anything else that you are curious about? Obviously, I don't have all the answers. I'm still learning. I'm still 28, and so have a whole investing career ahead of me. But curious, while I have you on here, if you ever had any questions about anything that I'm doing that you don't necessarily understand, and then I obviously have a bunch of different questions. I could go on for hours asking you stuff. So.
Yeah, well, no, when I listen to you, you come off as so savvy, and you know what you're doing, and what you're talking about, because I feel very that I'm not good at investing. So whatever you say, it makes sense to me, and I'm just kind of absorbing all of that. But right now, at this point, I don't. I mean, I'll ask you a question if I have a question. I usually type it out, but right now I'm just totally blank. I don't know what else to say or ask.
Well, I have a
Yeah.
million different questions. So everyone does a lot of these live streams now, and
Yes.
everyone's making a lot of these videos. I guess what's the biggest? I guess the top couple things. I'm not going to give you a number because I mean you could probably go on forever. But what are the top things that you've kind of learned from the different investing community members that you value most, being where you are in your investing career and being someone that has really recently come into their own? You've been now investing, I guess you said since 2013, so going on 6-7 years investing. What's the biggest nugget you've kind of pulled out over the past couple of years from YouTube?
Okay, what I learned the most from the channel creators is how to analyze a stock, a single stock. How to you see an ETF does not need to be analyzed because there's a bunch of stocks in there. It's all done for you. But how to analyze a single stock, and like cash flow and all, it's also confusing for me. So and I'm still learning. And so when the channel creators, when you all kind of say how when you pick a stock, what do you look at, what do you think, the PE ratio and all, it's also the balance sheet and all, it's new to me. It's all something so confusing. So what I do is I say, okay, they have analyzed it so well, I'm going to invest in, say, AbbVie. And everybody was talking about AbbVie a couple of months ago when it was really not doing well. And I said, okay, and I'm doing so well in it. So that's what I do is I copy you guys. Whatever you say is doing well, I just invest in it. And sure enough, I do good. So, but I don't know how to invest. I mean, I don't know how to analyze a stock at all, so I learned from you guys. Yeah.
Okay. That's really nice to hear. And AbbVie is one of those ones that even people, YouTube, it blew up like crazy. Everyone was talking about it, but also people at my job. I work with an older geologist, he's a geophysicist, and he was very adamant that not put everything, but purchase if you don't have any AbbVie to buy some. He had been a longtime shareholder, and he saw the price go down. He's like, I'm going to buy more. I mean, that's just a bargain of a deal. So hopefully everything goes well with the Allergan merger that they're going through. And I'm personally bullish on it, but I don't have enough that if it doesn't go well, that it would really hurt me in terms of the portfolio allocation and things like that. So yeah, hopefully very bullish, and it turns up being, a multi. It ends up, paying itself and hopefully dividends throughout time. So that's the goal.
Well, the dividend experiment is asking me, is there anything that you have seen or heard from any YouTuber that you disagree with in regards to dividend investing? I have not. I mean, I don't know enough to where I can take on anybody and say, hey, I don't agree with you, and so this is my take on it. No, it's just something, I just I mean, like I said, I cannot make an argument on anything. So I just invest whatever makes sense to me. If somebody's analyzing a stock and it makes sense to me, I buy the share. I just go out there and then I basically look at the big ones, the aristocrats. That's what I've been hearing constantly. Okay, go J&J, and somebody's buying J&J. Somebody's buying like Eaton Vance, all those good companies. That other one comes to mind is, it just slipped my mind. But there, all these companies like 3M. 3M is one of those really good ones that pays good dividend. So it makes sense to me, and I said, okay, let me just jump in and see. Let's see what happens, because the stock went down, and I just bought it, and I'm doing good. So that's the way I do it. No, I do not disagree with anyone because I don't have enough knowledge.
Yeah, I had a gentleman, Andrew, that had asked me some questions. I think he's 17 or 18 years old, and he had asked me the other day what I would invest in. And I always hate this question because, as you can probably imagine, anybody that asks a question, they could be in any sort of part of their investing cycle. And you don't know what their risk tolerance is, what their goals are. And so once you're able to start kind of answering those questions, it makes it a little bit easier to sort of answer a question like this. So I know luckily Andrew is a younger investor. So I think that what somebody in their sort of position would need to do is understand, and I agree with you, a lot of really good knowledge, especially from a lot of the guys that are investing and creating content in the live stream here right now. But if I was starting over at 17, 18 years old again, my personal goal would just be, because I kind of started, I guess you could say 4 or 5 years after that, is maybe even 5 or 6, if you want to count the years that I was investing in stocks and had no idea what I was doing, is really just understand what my long-term goals were, which now is dividend investing, passive income, potential real estate that's providing me income, things along those lines, and stick with it. Because I think what ends up happening is a lot of people, they invest a little bit, they see it goes up, they see it goes down, they get discouraged. But as long as you're consistent and continue adding to the portfolio, you're going to meet your goals regardless of whether or not you have a down year, up year, and eventually you will have up years. I mean, if you believe in the United States economy, it's going to go up and to the right. Yes, it might take a break for a year, 2 years, maybe it'll go sideways for 5, but as long as you believe that the United States economy is going to continue to develop and create wealth long term for not only the country but for the world, in terms of products like Apple, Microsoft, creating cloud services, providing oil and gas, providing industrial needs for things like Post-it notes and stuff like that. These are all products that come from the United States. And it's interesting, I'm living in Trinidad and Tobago now, and we're talking about we need to go to the store and get more Post-it notes. And it's like so foreign to me that I'm living, 6 hours away by plane, and I still need to buy a product from a company that I'm invested in. So it's those sort of things that really get me amped up and really gives me focus and gives me encouragement that continuing to invest in dividend paying stocks over the long term. Now, depending on what people really want to do, whether it's passive, active, stuff like that, that's when it starts getting very fishy not fishy, but it gets a little bit more into people's personal investment choice. You love it, right? So all good. You absolutely love investing and seeing the individual stocks and see them go up, go down, and see the news. And so, like you mentioned earlier on, you really enjoy ETFs because, yes, you kind of are able to invest for free using Vanguard, but you have to pay a little bit of a fee to invest in single individual stocks utilizing Vanguard as well.
Yeah.
So I'm curious what your thoughts are. I mean, as a young person, looking back with your investment career at 65, what would you recommend for someone that's, say, 18, 19, just getting into their career investing?
I mean, I wish I started at that time. I hear a lot of people saying that, and Andrew Lang over here is like, he's, good investment towards Fidelity, young student who does not have, just keep whatever, you can spare, just keep investing and put it on like the how it is, that monthly or something that you put in there, dollar cost averaging, right?
Yeah.
And it's automatically, it goes in there. So you have to start now, and because when you go later on, you'd say, oh man, I wish I had started at that time. So you're at a very good place. You have all these young YouTubers who are already investing and have, like Matt Money and Hidden Freedom and Gen X. They all have that experience. So you have so much knowledge out here for you to start with. So you're in a good place. Commission free, no problem. Way back when, people had to pay like almost $10-12 to commission to buy a share or what have you. So you're in good shape. But keep the young crowd, I would say, I mean, it's awesome that they are so savvy at this age and they're thinking about their future, and they have the timeline. I mean, they have long ways to go, 30, 40 years. Even you have, you're so young, you're like 28. My goodness, you have a whole, this thing ahead of you. So you'll do good. And Matt, your portfolio, when I looked at it, and I said, at his age, that big of a portfolio, he has to be a petroleum engineer. In fact, I one time asked you.
Yeah. I would always. So a lot of people would always like. Yeah, I think a lot of people put it together, and I think in the chat here, a lot of people put it together because I have a lot of energy stocks. I lived in Houston, and
yes,
high income engineer. I mean, it started to make a lot of sense that a lot of people would probably put it together. And I would skip over those questions or comments, and I would, luckily a lot of times they would have questions right above it, and I would just go right to either write that one and then right to the question right below it, and there was the question or someone saying petroleum engineer right in the middle. So
yes,
real interesting. I'm really curious though, you said you have experience now with folks in the family mishandling their money. Can you share that experience with us? Obviously you don't have to go into too much detail, but if you can kind of give generalizations, I'm sure people would love to understand and hear about your perspective of that, coming from someone that is more, I guess, financially wise. You would be modest and say that you're not financially educated. I would disagree. I think you're very financially educated, but you would probably say, I was just more financially wise with my money comparatively to some of folks in your family. Can you give us some insight on that?
Well, the first thing that I just said a while back was my siblings, they blew all the money, the inheritance that they got from my dad. I just invested, and they have no clue. Women my age have no clue, and that's what concerns me. That people are, especially women, very few women are are aware of handling money the right way. And I have to stop. Dave, what is this about pause? Look at him. He's asking me a question. How many paws for my broth? Come on, we've been talking about it a while back, and I was telling about the keto diet, and we were discussing that. And I was telling about the broth, and here he comes. That's the question he asks me. Gosh, because he knows I have no answer for. I'm not good at investing.
He's trying to throw you off.
Yes, he is. He is. He's always, joking around with me. So, yeah, but the thing, Matt, is going back to what concerns me is that women, especially, have no clue. Their husbands are taking care of the investment part. And when the husbands die, women are left, like, what am I to do? And what happens is that people who know that, the husband is dead and he's with money, they come and talk to the women, the widow, and say, okay, I have a good investment for you. And you know what they do, what they make them invest in is the big commission that they are going to get from
Yeah.
it, and that's annuities. And my husband he keeps telling me every time, he says that that's a widow maker or something like that. Do not ever, if he says, if I die tomorrow, do not ever invest in annuities, because you'll be finished. They will eat it all up, in the sense that 40%. And that it happened to a friend of mine. She had no guidance, and her husband died. She came into $1 million. She invested in annuities, and 40% of it was all gone, because in annuity is something that you have to know what you're doing. See, single stock ETF is okay for a woman like me who does not know what she's doing. She'll be all right. ETFs would be okay, but annuities and stuff like that, you better know what you're doing.
Yeah.
So I would say, so that's what I'm. And a lot of, I talk to some men also, and they just give the sad part is this. Oh, I don't know anything about investing. I have this my investor, the financial advisor. He invests in something. I just hand him the money. I mean, I'm like, what? You don't take care of, you don't invest yourself. You're not like a self-directed investor. No, I don't know anything about stock market. So, it's just, it's sad. It's very sad that women are bad about it. Men are too. They're not into it. So, and this is Gen X is saying, all good. Ever try to convince her friends to invest, or has she given up on trying? I've given up. It's just like I get blank stares. It's like, what are you talking about? Even my sister, I said, invest. She says, I don't. It bores me, and she just goes. She says it just bores me to death, to where I just fall asleep if I have to invest anything. And she just,
Well, let me ask you a question, because I have friends that, in passing, they know I'm a big investor. They know I have the YouTube channel and stuff like that. I have a question for you. Do you ever have friends that will be like, oh, you should teach me how to invest, or I'm really curious, and then you might actually try to help them, and then they just...
Well, most of them don't know that I invest. See, I know that if they have no clue, because they are into parties, and which I'm not anymore. And how women things are clothes and jewelry and shopping and all that. They want to spend money. They don't want to invest. And investment is where you have to be el cheapo and just save every penny. And I mean, to me, I would rather invest in a stock than go buy jewelry or clothes. So it's one of those things. No,
I
they don't
think
even.
it's a mindset thing. I really do.
Yes, it is, and I don't know how I got to be like this. I have no clue. But the thing is that I enjoy investing, and I enjoy the YouTube community, and learn from them. It's fun. It is fun. Yeah.
Yeah, I mean,
So.
I have folks that join me or that ask me all the time, like, oh, you should teach me this, you should teach me that, and I mentioned this a little bit earlier, but I think you were busy, and you had joined a little bit later on. But earlier I was saying that I've had folks, and I think I opened with this actually, that I've had folks in the past be like, oh, you should teach me, and then I'll provide them an article, or I'll provide them a video that I've done in the past, and then in the past I've asked people, have you watched it, have you watched it, have you watched it, and I've given up asking people if they say I want to learn to invest. I'd be like, okay, well, I'll take them to my YouTube. And this is actually kind of a funny story. Take them to my YouTube, show them my URL. It'll show up. It'll say Matt Money. I'll hit subscribe for them, and I'll say, if you're interested, here's the channel. I have 200 videos. Feel free to watch them, and then I'll just never ask them again. And if they want to talk to me about it, I'm more than happy. I now have a couple coworkers here in Trinidad that know about the channel, and they ask me on a day-to-day basis, and I talk to them. But Yeah, still some folks in Houston that I talk to, and
Mm.
they'll be like, "Oh, I need to get investing," and I'll just be like, "Yeah, okay," and I kind of just nod my head. And even something as simple as, I want to get invested, I need to invest in Robinhood. And I did this to somebody in my family over Thanksgiving, and somebody 6 months ago, or and even 2 months ago, I said, "Here's a link." I was like, "You get a free stock, I get a free stock. No, no strings attached. All you have to do is sign up." And even that, I mean, and these are people that are telling me they want to invest, and you're giving them the opportunity, free investments, and still they refuse, or just are afraid. I guess I don't know what it is. It's a mental mindset change that I think people get impacted by, and they just put it in their head that it's something I'll get to later, and then it just never happens.
Yeah, well, Matt, one thing I've learned in life is you cannot motivate or make people do what they don't want to. See, I can talk to friends till I'm blue in the face that, invest, please take care of the financial part of your life, because of course it's too late for them anyways, but at my age for them, but, they're just not willing to listen. And, like HROD0794 asks, how all good, how was your portfolio affected? 2008, I wasn't investing in 2008. That's the time when I was watching television, which I don't anymore, is when each day the market was dropping 700 points, the national news, and then next day it was 600 points. And what is going on? What is this all about? What is all the what is this market about? Why 700, 800 points? And that's when I got hold of the computer and I started researching. And Nouriel Roubini, I don't know Nouriel Roubini, if you are familiar with him. He's an Iranian big, economist or something. He was saying I was this bubble. I was talking about this bubble that's coming, and now it has happened. And so he was the Mr. Gloom and Doom at that time. He was called the Mr. Gloom and Doom because he was predicting 2008, not actual 2008, but he was predicting that the market, there was a bubble and something is going to happen. The crash is happening. So that's when I got interested, and of course I started researching. But these days on YouTube, there's more material available through YouTube community that you can learn just from YouTube. You don't even have to take a course, that expensive course that people are selling to learn how to invest. But yeah, thank you, Jordan. The woman, this woman inspires me to keep on investing. Yes, yes. If I'm in any inspiration at my age, man, I mean, that you made my day. Thank you so much. Yes, I would say keep on investing and listen to these gurus, all these gurus over here that are, like Matt Money and all. Yeah, they're all my gurus. I bow to them and I say, oh, thank you for all the information.
Oh, it means a lot. Yeah, you're a valuable member to the community, so don't think otherwise. And I need to join this Discord. I keep seeing people post about it, and I need to join. It'll be a good
yes,
good thing for
yes.
me.
Yeah, it's fun. Gen X or Discord. Are you talking about Gen X Discord chat
Yeah,
group?
I've seen them.
Oh,
Talk about it.
yeah, yes, it is fun. You must, join us there. And there's so much, kidding around, and which I love about them. Gen X and Hidden Freedom, they're so funny. These two, both these kids, they're so funny. So it's fun to, and they make fun of me a lot, which I love. They're always pulling my leg, and they're always making fun of me. So it's fun. Yeah, I'd love to see you there and have fun over there with them. And it's like, you can join the chat group. You can talk to each other. That's the fun part. You
Yeah.
don't have to. You can type as well as about it. So yeah. So yeah. Anyways, I better get going. It's kind of past my bedtime. It's 9:15 here. It was fun. Matt, and so I'm off the hook, right? You're not coming to Houston and taking my interview that way, right?
I
Are
mean,
you?
only if
I
you.
won't be in
I'm not
front
going
of
to
the
pull your
camera.
leg. I
I'm
think this
done.
is good. You're done. You're calling it.
Yes,
This is your YouTube start and end.
yes, this is it. I'm done. Thank you so much.
Well, thank you. It really means a lot, and yeah, I'll
Yes,
definitely reach out to you when I go to Houston. But I won't make you feel obligated to give me an interview. This is your interview, and I really appreciate the first and only exclusive with All Good
Well,
on
thank
my
you.
channel. That means a
Well,
lot.
well, I did it especially for you because if it helps to bring more people in, then more power to you. And that's, as a supporter, I'm a big supporter of yours and all the other channels. So thank you so much for the opportunity to be able to talk to you and all my friends over there. I mean,
Yeah.
out there in the community.
I just hope they don't hate me, because I feel like everyone would love to have you on their channel, and you might get people jealous if I'm the only one. So maybe you can convince yourself to go on some of the other ones.
Well, see, what has happened is now everybody knows my story, and it's going to be a repeat. So nobody will be interested anymore. So this is it. So you did good. You got me first, and now everybody knows about my whole story. So nobody would be interested.
Yeah.
So okay, well,
Thank you so much.
I'll see you later. Thank you.
Thank you. I'll talk to you soon.
Thank you. Yeah. Okay. Thanks. Bye.
Okay. Bye-bye. Wow. That was so unexpected. To be honest, when I saw All Good joining the stream, I thought it was somebody playing a joke on me. I thought it was Hidden Freedom Investing, joining, and because you can type in your name, right? I mean, you can type in what you want to be called. Like I put in, Matt Money as mine, and of course with that you can kind of put whatever you want. So I was really surprised when I saw All Good, and at first I was like, somebody is pulling my leg. But the fact that All Good joined, really, it makes my day. I don't know why, but it really does. Like you get, this night has been pretty surreal. Now I've had 3 people join, and all 3 being strangers to YouTube in the respect that they don't create content. And a lot of us, the Gen X, that would have been hysterical if I just showed up and it was just you. Of course, I would have continued, but it would have been such a funny moment. But I was even more blown away when I heard this nice Pakistani woman who lives in Houston, or Houston suburb rather, join us on the chat. And wow, I need to make sure that I take her and her husband out to dinner and hear some of his stories, because we're both in the same industry. I'd love to get in contact with him, find out what company he works for, and hear his advice. It seems like he's an interesting guy, and with somebody as awesome as All Good to come home to and talk to every night and learn from. She seems like such a wise individual. I'm so humbled that she came on. I'm super upset that I couldn't convince her to stay a little bit longer, but I understand it's 9 o'clock, and she obviously it's getting a little bit late in Texas. So I'll try to convince, and I'm sure others of you will try to convince her to come on in the future. But wow, I'm almost at a loss for words. When she first came on, you probably saw my face, and if you're watching this on I guess repeat after the stream is over, I'll probably put like a reaction slow-mo of like the fact that once I heard a nice woman's voice that kind of sounded like Mrs. Doubtfire, honestly, but with a Pakistani accent. I loved it. Super great. I'll have to go to Kebab House with her on Mason Road when I go back to visit Houston. But I saw a bunch of you join the stream. I really appreciate it. Toplist, I saw that you might want to join us as well. You could be our 4th caller. Yes, I agree. All Good. That was such a great perspective. Hearing someone that is 65, going into the fact that she's getting closer to her and her husband's potential retirement age, hearing her perspective, because I feel like a lot of us, like she mentioned, we talk about consistently adding to the portfolio, continuing to grow the portfolio, but at some point you reach a state within your investing career, and we talked about this a little bit with Jesse even, where you want to more so conserve the portfolio. And just because, and I feel like I don't give that perspective enough, or that piece of advice enough, because unfortunately, for those of you that are watching, I'm younger in my career. And so for me, in my career, I'm trying to continue to expand the portfolio and really just continue to grow the dividend income. So, wow, still an astonishment. But we had another. Yeah, all good. You made my night. Thank you. You are the kind one here, and I really appreciate it. I'm going to be the envy of the YouTube community for at least a couple of weeks. Everyone is going to be like upset that that you came onto mine, but you're not. Maybe we're going to have to start paying you, and that's how you can make your passive income and more money that you can invest in the stock market is through that. But we have Toplist joining us. Thank you, all good, once again for joining us. We have Toplist joining us on the stream now, the fourth caller. So Toplist, thank you for joining us. I've seen you on my comments section before. You want to introduce yourself to some of the folks that don't know you too well?
Yeah, for sure. No one knows me, and I appreciate you having me on, especially on such short notice. I would say I've been watching you for about probably half a year now. I really like your style. You're not the type about to just try to like status flash like Lambos and stuff. Like you seem like just like a normal, humble guy in the grind, and that's definitely more my style. So for background, I've been investing since about 2014, but I would say I spent the first 3 years of them being very, very stupid. And by stupid, I mean you know this stuff, penny stocks and all that sort of stuff. Anyway, so my financial situation, which I wanted to get your opinion on, is something I've been grappling with for many years. So as you probably can guess, I've had a big succession of really successful YouTube channels that just have blown up. But I think you know this too. YouTube is a really unstable, inconsistent platform. I've had channels die off. I've had them be demonetized. I've had them shut down. And all the meanwhile, I've been investing during it. But the problem is that, unfortunately, putting like on a personal level, putting all my eggs into the YouTube basket, my resume has a massive gap on it. And so, beyond the YouTube thing, I wonder about my ability to support myself. You know what I mean? Because, for example, I'm 27. And if you're 27 and been doing YouTube channels for so many years, and I think actually I have a degree in history, that doesn't have much use either. So I guess just to sum it up, my situation is I have a decent nest egg saved up from all the various channels I've had. And also I've been investing in gene therapy stocks, which I've done quite well. So my advice to you would be to how to best mitigate the feasts and famines between, YouTube channels doing well, or the fact that another YouTube channel may never take off for me again, because you just don't know.
Yeah, no, and this was a phenomenal. Yeah, you mentioned it a little bit earlier. I wish I could find it. Can you do searches on here? I don't know if you can, but you mentioned it. You do have a unique situation, and I believe I have seen a couple of your YouTube channels as well, and so I was curious when you've talked to me on some of your on at least this particular YouTube channel name, and I was curious if you were some of the other channels that I followed. So I'm sure I follow and watch a lot of them that have kind of come in to and from throughout the years. But yes, it's a very unique situation, and a lot of times what I recommend to people is I don't know how much you have. You said you have a decent amount of nest egg, but I think with your situation, and Graham Stephan mentioned this a little bit yesterday, is he was talking about this on his show. I don't know if it was his millennial money sort of thing or if it was his normal thing, but he was like, oh my God, like I have this YouTube sort of potential that who knows.
That's exactly how I feel.
For.
Except I've already been through the deaths. He hasn't yet. That's the only difference.
So you're all on the downcline, or you have some that are on the downcline, some on the up?
Yeah, I run about 6, and they're always going in and out. You know what I mean? So at the moment, I would say, compared to, I'll just say it frankly, I had one channel. It was demonetized recently. It was doing 20K a month. So you go from 20K to 0. I'm just telling you, it's so inconsistent. And I feel exactly the way that you said that Graham feels, that the only difference being in this case is I don't think he's ever seen, the setbacks, because channels die all the time. They do.
Yeah. Yeah, I mean, I think I guess the biggest thing is for someone in your situation is what are your expenses and how much you making. You know, I mean, you just said that this channel is making, say, it was making 20,000 a month, and I assume that you probably have some other ones that are making a decent amount of money as well. I mean, how much do you actually need? And I feel like if you're concerned about these potential channels going down to potential revenue, I assume you're spending way less than you're making at this point. You seem like a pretty frugal guy. I feel like with the money that you're making, you could easily get to a point where you could get your finances covered pretty easily, and get to the point where if all your channels were to die, you'd at least be okay. And I think that this seems like an angst point for you. You're kind of on this. You're trying to ride this YouTube aspect of things to the best of your ability, and I think that you've done a really good job. At least if you're the channels. Actually, before we continue, do you mind telling us the channels? I would love to kind of keep them in the loop and see if I am actually invested in some of them.
Yeah, for sure. Oh geez, I've had so many. Let me try to get this. So I have this channel, Toplist, which made educational videos, and that's on the decline. Unfortunately, YouTube decided about a year or two ago they don't like content that's about history or political conflicts. So that's kind of on the down low now. That pulls in about $1,400 a month. I had another channel called Text to Meme, so I made meme compilations, and that did very well, but that was shut down and demonetized, and I had to rebrand. I have a channel called Topsy, which had Spanish educational language content, which I rebranded to meme stuff. It's like a conglomerate. It's complicated. I have an investing channel, which I guess I'll shout out here, Eugene Chargrain, but that's pretty small. And that's about it, I think, actually, at the moment, beyond a few smaller ones. But it's mainly those. And so, like I was saying, actually, it definitely is an angst point, as you said. You definitely latched onto that correctly. And in the past, it made that much. What I'm saying now is that they're all on the down right now. And so beyond, I think, the passive income, which is about $1,400, $1,500 a month from the Topsy channel and the Toplist channel, that's about it. So yeah, you can keep your expenses low, but here's the thing, I'm addicted to investing, man. Like, I want to know that I can contribute to savings, and there's only so much you can cut on your living expenses with knowing that you probably have a life expectancy of 60 years out from now. You know what I mean? And like, subsistence on passive income isn't a very good model, especially given inflation and everything else.
So yeah, I guess my quick question for you is, where are you? You said you have your investing channel. Can you remind me? It was Eugene what? I'm trying to look it up.
I must have said that quickly. It's very tiny. I just do it for fun in my free time. It's called Eugene Chargrain, CHAR, and then grain as in the stuff that makes wheat or bread, I guess.
Interesting. 73 subscribers, 10 vids.
Yeah. It's not it's just a hobby. I'm not really investing the most time I should be into it.
Well, you're getting 32 subscribers a month at least, so you're doing pretty well. But that's pretty interesting. So you're saying altogether you're only making $1,400 now? I find that hard to believe. You have like over 1 million subscribers between all those channels.
Yeah, I do. But what really matters, though, subscribers these days, as you probably know, don't matter so much. It's your monthly views. Yeah. If you aren't on the upswing, YouTube doesn't let you reach your subscribers. So there are over 1 million collective subscribers, but the monthly views, I would say, are only probably in the 1.5 million range between everything. And one of the channels I had to massively change just because it got demonetized. So it's a complicated situation, but the headline, the takeaway is that it's only $1,400, $1,500 a month right now.
And curious, YouTuber to YouTuber, what's your CPM looking like?
So it depends on the channel. Okay. So when I made which are meme videos, meme compilations, the CPM was just abysmal. I mean, I think because it was like targeting people who didn't have much spending power. So that was honestly like 98 cents. I mean, it was just, wow. Yeah, that's bad. Yeah, I know that's bad. And then the education Toplist channel, depending, obviously, it depends on the month, right? December being the best month, January being the worst month. Toplist would do about $1.50, $2. So I hear that's actually below average too. I don't know if you have any information on that.
What'd you say it was? Sorry, I missed that very last part.
Yeah, it was $1.50 to $2 CPM for the Toplist channel.
So I don't. I'm gonna feel like an asshole. I'm gonna be 100% honest with you, but yeah, I mean, in comparison to what
you do financial stuff though, that's the highest CPM by far.
Yeah, so I kind of lucked into that, right? So when I first started, I don't know how long you've been following my channel, but I was doing cigar reviews, and I was like, well, what do I love more than cigars? And they seemed so repetitive, and I didn't see myself being like a cigar review kind of guy. There was other people that I really enjoyed following more, and I like smoking cigars, but smoking like 3 cigars a week I didn't think was good. So I really like dividend investing, and that's how I kind of came into this. But as you know, I probably only really started making money from this in early 2017. And
yeah, it takes forever to get monetized.
I guess it's let's double check. I mean, sometimes over the last 20 days or so, it spikes up all the way to 20.
Jesus.
But I'd say it probably averages around 15, 16, which is still phenomenal. Right?
Wow, dang.
And
yeah,
so,
no, financial CPMs are by far the best on the site, just about.
Yeah.
Other than, I guess, if you're making videos about insurance.
So I guess, for instance, I just had it up to give you an idea. For the last 28 days or so, I did make about $190.
How many views?
From YouTube, and that was, is it going to show me? Off of the last, where is it? Last month. I'll pull it up on my analytics here. So in the last month, and then we can get back in it. We kind of deviated, and I apologize.
Yeah, no worries.
CPM in the last 28 days is 20.29 cents.
Jesus.
And that was off of 17,500 views. So
that's, yeah.
So you're getting like 1.5 million views, and I'm making, like I said, 7th. So it's like the amount of money you're getting 1.5 million views. I'm getting, I guess, 1% of the views almost, but only making a 7th of the. So yeah, it's pretty interesting. That's a really interesting situation. So I'm curious how your Eugene channel kind of comes along, and I think I posted it in the market, or sorry, not the market, the live chat for everybody.
Thank you. I really appreciate that.
But and I'm curious. I left it before I even subscribed. I'm really curious. I always like watching smaller channels, but you probably have high quality production. So I'm very curious what your
could be better, but yeah, I appreciate you saying that.
But interesting. So you're on the downswing. You don't have, so you're making only about $1,500 a month. So I can understand your concern. When you were making $20,000 a month, I guess how much? Well, I guess let me ask, how much in a portfolio do you have invested now? For those of the people that are on the channel, I might have asked you, but I was too busy.
No, you didn't. I don't want to say the specific amount. I think that's. Yeah. I'll say it's 6 figures. It's in the 6-figure range.
Okay, so it's in the 6-figure range. Is it like close to 7 figures, or is it not really?
No, not close.
And I guess what are your expenses?
So I guess a good way of thinking about it is that it's similar to your taxable account, I would say.
My taxable account, meaning my, okay, so it's about 100.
Yeah.
Okay.
My expenses. So I live in Asia actually. My expenses, and I do have a bit of a taste for the higher life, but you can afford it here. My expenses are about $1,000 a month. Okay,
so Asia meaning like Thailand, or like Asia like Central Land, China?
I'm in South Korea.
South Korea, and it's only $1,000 a month. That's surprising. Okay. Wow. I was expecting South Korea to be more expensive, but that's interesting.
It really depends how you live and where you live.
Okay. Wow. I have a buddy that lives there now that everyone knows what I do. We're building a facility in South Korea, so he's in Busan.
Oh, cool. Oh, yeah. I live in Seoul.
Okay. Yeah, so I think it's about a 2-hour train ride to where he's at. But anyway.
By KTX, yeah.
Yeah, he was asking me to come visit him, and it's pretty difficult to get there from Trinidad and Tobago. But
you should. It's great here.
I should, yeah. He shows me some funny videos of people singing karaoke all the time. And
yeah, that's the best part. Yeah,
it's the best. And he's just like, I have no idea what they're saying, and I think it's so funny. But anyway,
you're speaking in Korean, kind of curious and then we'll get back on topic.
Zero Korean.
Zero.
Yeah, I mean he's like an Irish, not from Ireland, but Irish descent gentleman. So speaks pure English. Grew up in Florida, so they shipped him
Gotcha.
over to Korea, and he's just like, "What am I doing?" But anyway, back to you. So that's interesting. So your expenses, I'm sorry, I kind of missed that part of it. So what is like your monthly expenses? Is it like 2,000?
Right. So,
No, you said 1,000.
so subsistence is 1,100. If I want to have a good time, though, it gets up to 1,500.
Okay, so 1,500. So you'd be looking for probably about 1,500 times, 12. I'm not good with mental math, but times 12, so about $18,000 to $20,000 a year, and you currently have, about between 100 and 200,000. So yeah, you're probably looking to double or triple where you're at now to be able to get.
Exactly.
Wow. Okay, that's interesting. Well, what you could do easily is you probably have a unique talent where you could almost create a business, whether it's working with people in Korea. Anyway, I don't want to do that because that's obviously but that's a really good conversation. And in fact, I would love to get input from you, because me and Passive Income Investor are trying to create our own sort of YouTube sort of website, sort of blog, sort of stuff like that. But that's a different story for a different day. So anyway, what's your portfolio kind of average in terms of dividend yield?
My dividend yield is about 4.34%, I would say.
Okay,
so let me go over my strategy really quick. I've spent the 10 years, last 10 years, I would say the last 8 years obsessively following biotech. And I've reached a point where I think I have a decent grasp over it. But beyond that, I'm not going to pretend I understand a single thing. So the rest is just straight dividend ETFs. That's it. So about half-half.
Half-half. Okay, so does the biotech really pay a lot of dividends, or is it like in the 1% range?
We're talking pre-commercial, hyper-speculative.
Okay, I understand that.
I'm an adrenaline junkie.
Yeah, I've been in that space as well. So are you day trading that, or is that long term?
All long investing. I'll tell people I invest these days. I focus on gene therapies, and there's a lot of mergers and acquisitions going on in there right now.
Okay, interesting. I'd have to take a look. I know literally near nothing about it, so it's really interesting to.
Yeah, don't worry about it. That's how much I know about everything else. So yeah, definitely relatable.
That's really cool. So your thought is how in a point where you are struggling to continue growing the YouTube channel, how do you get it to the point where you can, create other ways to invest so that way you can become relevant?
Grow it.
Yeah.
Exactly. Well, yeah, exactly. It's tough. It really is.
Yeah, that's real.
You're
tough.
only as good as your last success, and there's no guarantee you'll take off again.
Yeah, well, hopefully, you get a little jump start on the Eugene Chargan.
Really appreciate that.
And I'm sure if you in the future want to come back and do a live stream with camera and stuff like that,
I'd be happy to. Yeah,
to do that.
We're only just scratching the surface right now.
Yeah, so I'd be curious. Especially if you start doing more highly speculative investing, there are some folks that do a lot of day trading in the finance aspect of.
I know what you mean. I don't like day trading though.
Well, no, I meant that you kind of have a niche in the fact that you don't day trade. There are people that do day trading. There's a lot of competition kind of coming into the dividend investing world, obviously, with the people around my group that have the 1,000 to 3,000 sort of subscriber range. But you kind of have your own niche there with having, gene therapy. I don't think anybody knows anything about that. So, if you kind of create a channel potentially around that, which is more speculative investing, albeit it is long term, that would be really interesting, and I definitely would watch it as well. That's crazy.
I didn't consider that. I think before it was lacking focus. I was talking about that, dividends, just everything. You have a good point on that.
Yeah, so you could go slow and steady, and depending on your production quality. I have horrible production quality, generally speaking, comparatively to like financial education and
You're
grant?
definitely improving, and I know, at least for me, I only really care about the content. I'll listen to someone with poor audio just as long as the content's there, you know. But
Yeah.
I get that the average viewer is not necessarily like that. But I can tell you've been improving. I'm seeing custom thumbnails. You're getting better at delivering when you're talking extemporaneously. I think you're on a good path, I would say, from
Yeah,
my professional opinion, I guess.
no, thank you. That means a lot. Part of this is like I'm doing it as well for me because, as you know, if you're trying to put content into a channel and it's not working, it gets very stressful.
Yeah.
And especially when you see some other folks, and you probably have this as well. I call it YouTube envy, but you see people with more of a subpar content, but they deliver it better, and so they end up getting, I guess, more recognition, even though
Or worse, when they steal your ideas.
I've never had that. You probably have a lot more experience with that when, yeah. Okay. Interesting. Yeah, I never thought about that.
So yours is more unique. I don't really see anyone, like going on the copying thing. I don't think you really have to worry about it. But yeah, it's definitely an example of, I guess, what you're calling YouTube envy.
Yeah. Well, I see a lot of people even like they just have like they do the same sort of thing every single day, and it's kind of like I'm not really learning. I personally would rather not put out a product if it seems very repetitive.
You might have to part with that way of thinking. See, here's the thing. At least how I see it. Part of listen, most people have no one in the world to talk about investing with. I think you know that. I know that. And the point of the daily content, even if it's repetitive, it's like the comment section. It's like the water cooler. It's the daily radio show to talk around. And YouTube is all about momentum. It's all about view velocity. If you're getting the views up, you'll get recommended more and more and more. And if you start to slip, you get throttled. It's a vicious treadmill. And so I think you're actually even kind of doing that right now with something like this. Like, you're not really pre-planning the content, but it's a place to hang out, talk. I would say you're probably open to that idea if I had to guess. Between just like not making a video, not necessarily with a purpose, but just doing it anyway.
Yeah, that's interesting. Yeah, I'm kind of curious what your thought is. I mean, I'll be sure to talk to you more in the future.
Please feel free to talk to me off stream. I don't have Facebook or Instagram, but you can Twitter DM me, and I have an email too I can send you.
Okay, that's crazy. Yeah, this is real interesting. I had no idea. I mean, I kind of had an idea that Toplist was big, but I never really clicked on it, to be honest with you. So, is Toplist the one that got demonetized?
It's still monetized. So that's what's providing the majority of the income. I had a channel called Text to Meme, which made meme compilations, and that was pulling like, oh goodness, like $15-20 million a month. Or not yet $1 million, I wish. Million views a month, and then correspondingly about a $1 CPM. I think you know this too, but like the worst thing about YouTube is that it's self-employed income. So you get annihilated on taxes. It's horrible.
Yeah, well, I think this will be the first year I make above 1,000. So
yeah, that's true,
I never had to really worry about it, but this year I'll for sure need to worry about it.
That's why I try to get as much as possible from the YouTube stream of income to the dividend passive income thing, because the tax treatment is just so superior.
Yeah. So what platform are you utilizing? Are you utilizing Fidelity, Vanguard, or?
I have, so I'll tell you the three I have, and then the two I actually use. So I have Robinhood, Fidelity, and TD Ameritrade, soon to be Charles Schwab. I mainly use Fidelity and TD Ameritrade. Okay,
why don't you use Robinhood?
It came up, like I said, I've been investing since about 2013, 2014. It wasn't around back then. I would say that's the only reason. And Robinhood too, I don't think it's really catering to someone in my style. You know what I mean? It's not like TD Ameritrade has commissions any longer, so what's the point?
Yeah. No, I have $40 in my Robinhood, and I think people would probably now being like, what? And the only reason why, to be 100% honest, I
think I have my free stock. That's about it.
Yeah, I think the only reason why I had made a M1 Finance account is because everyone.
Oh, I'm sorry. Sorry to interrupt. I do have M1 Finance as well. I forgot about that. But that's that's triple digits. I wouldn't worry about it.
Yeah. So the only reason why I made M1 Finance is because everyone else has M1 Finance, and I felt like I had to jump on the bandwagon.
It's interesting. It's an interesting platform, and also too, I have to admit, it makes for good YouTube videos. The interface looks awesome.
It does.
If you're I'm just being honest, Fidelity, it looks like it's 1998 in there. It just doesn't make a good platform for making videos. Neither does TD Ameritrade, to be frank. It's not as bad though.
Yeah. Well, the Thinkorswim platform is pretty good. Is that TD Ameritrade? I don't remember.
Yeah, that's TD Ameritrade.
Yeah, so that doesn't look half bad, but maybe it's just because it's got a dark background. I'm a sucker for dark background.
Here's the thing. It looks too technical though for the average person watching investing videos. I would say that. Like people see that and they see candlesticks and they think, oh, geez, that's too much.
Yeah, I'm logging off. I have no idea what's going on. Yeah, 100%. So that's interesting. So you're in a very interesting predicament. So you're basically at the moment making enough YouTube income where you can meet your expenses. And you're also trying to grow your dividend income so you don't have to worry about a YouTube income.
Exactly.
Wow. And obviously, I have a stupid question, but do you have a work permit to work in South Korea?
So I don't want to talk about the visa situation, but I'm all square on that.
Okay. No,
and if I could get, I think the only limiting factor for being employed here is my skill set. And my skill set over the past few years has really just been YouTube. That's it.
That's really interesting.
And I worry about the long-term viability of the platform. I mean, it probably won't affect you because you're 100% square. But the change is coming up with like the content guidelines and restrictions for kids and all that. I guarantee you won't be affected by it, but it's a concern for a lot of us, I would say.
But yeah, I mean, it was simple as like sometimes I watch big YouTubers. Mostly I focus on the finance, but every once in a while I'll watch like a Tanner Fox or something like that. And I was watching him. He got a Hot Wheels track or something made, and I was like, "This is directed directly to children." I'm just like, I was like trying to think. I was like, "How does this affect him?" This, that, like all these new things now. And I even just went on Amazon to try to I used to have an Amazon affiliate link, and I have no idea what it used to be. So now
those are generally pointless.
Yeah, I'm signing up again for Amazon just to get another $1 or $2. But I went on there, and it was like asking about kids on there as well.
Yeah. Here's the thing, man. YouTube, it's not what it used to be. Just online in general is not what it used to be 4 years ago. And you can kind of see like the, I'll call it regulatory for lack of a better term. The regulatory restrictions on people are actually getting to the point where it's approaching what cable TV used to be, right? If you need to be compliant with all these guidelines and regulations for children's content beyond all the stuff YouTubers are already dealing with, which I won't get into, the only people who can survive are the larger operations who can, again, afford their regulatory burden, and that's the direction I see it in. I think it's going to become as regulated as TV going forward, and there will be independent people on there, don't get me wrong, but you're going to need a team to be compliant. That's the way I see it. I don't know if you agree or not.
No, 100%. I mean, the fact that you're starting to get to the point where YouTube can bring litigation against you. You're going to have to get a lawyer. You know what I mean? It's like now it's more of a business. It used to be something that people used to be able to operate out of their
cottage industry.
Yeah. And now it's getting to the point where, just like with a lot of things, regulation increases the cost of business. And you're right. I mean, you're going to end up losing the small sort of mom and pop that, and in my opinion, I get more satisfaction watching those guys.
Yeah, me too.
Than some of the big names. But I feel bad because I keep going back to making money on YouTube and stuff like that without.
Hey, listen, no problem at all, man. That's my life's energy. That's what I do. I could talk about that all day.
Yeah, I'm trying to think how recent. Was the demonetization like last month? Was it like 3 months ago?
It was in August. And so I'll tell you one thing. When you're demonetized, and I'm telling you, it can happen to anyone.
Yeah.
YouTube pockets your last month's of revenue if it isn't paid out on AdSense. They just pocket it. So I had 15 grand sitting in that in limbo, and I emailed them saying, "Oh, sorry, if you don't get remonetized, we keep it," which I think is ridiculous. But what am I going to do against Google? So,
did they give you a reason?
So, no, that's just how YouTube it is. That's why, I love this as my passion, but I don't think it's a good career to get into for most people. I think you're fine. I think you're going to be fine, barring unless the SEC has a freak out like the FTC, which is possible. It's definitely possible. There are a lot of scammy investing channels out there. I don't want to jinx it. You're probably fine.
You're probably fine. Yeah.
I want to say that. I really do. I really want to say this. It's doing good for most YouTubers.
About it, though. It's in the back of my head every time I make.
You should. It's not the best career path to get into. You can have listen, the income, it goes feast and famine. It's mentally taxing to deal with that. You don't get health insurance. You get taxed at a self-employment rate. It could be better. I mean, if you're pulling like a gram, 100K a month, then yeah, sure, whatever. And also he has other stuff, but that's part of why, like, too, I'm like always on the edge. Like, I want to get out, but this is what I do. I like, frankly, not to seem arrogant, and I apologize if I do. I'm good at this. I know I'm good at this.
Well, yeah, I mean, over the course of, cumulatively, you have over 1 million subscribers. At some point, you were obviously doing something right. You know what I mean?
Yeah, and also too, like, here's the thing. Like, maybe we're getting to ego territory here, but like, I've had channels die and come back so many times. Like, I don't think there aren't many people out there who have survived as many channel collapses as I have, and that takes, like, you have to understand things in general, and also too, I've been in so many different genres. I've been like in education. I've made entertainment content. I've made gaming content. I've done everything, and all of them relatively successful. So it's a versatility I think I have that it's great on YouTube, but the platform is changing, which worries me.
Yeah, that is. This is really interesting. But I am curious, and then I want to go back in and specifically talk about your portfolio. So hold me to that. I'm curious if you really like this live stream format where you kind of have random people kind of just jumping on and kind of hearing from an outsider's perspective rather than YouTubers. Because I feel like most of the time people only bring on other YouTubers.
Right. So I hit a button by accident. So I think it's an excellent form of supplemental content. Right. So it should almost never be the mainstay. And then on top of that, too, is that you're at a good point right now, and it might stay this way, where, frankly, your community's tight-knit, they're awesome, they're engaged. As you get larger, you will have to mediate that. So I've done a lot of live streaming, actually, over the years. I was really into IRL live streaming, which is you go out with your phone and you go around and travel and stuff. And, frankly, those are huge cash cows if you do it right. If you do it right, they're really big cash cows. But the bigger you get, the more problems that come with it. So you'd have to definitely moderate as it goes on. And here's the thing too, like, the live format will always earn more money than just advertisements. I mean, think about Dave Ramsey, Graham Stephan. Those aren't even a live stream, but I think they're punching heavier than just the mainstream or the mainstay videos they make. Yeah. So if you get super chats going, if you get monetization incentives, here's the thing. Like, haven't you noticed over the past, I'd say 1 year, 2 year, everybody and their cousin's starting a podcast?
Yeah.
Yeah, there's a reason for that, because pound for pound, they make so much more money and they send engagement through the roof. That's my view on it on a very broad level. I could get into more detail if there's a specific question you have.
But it's interesting, though, and then please hold me to the fact that I want to get back to your investing, because I would love to get into that. But I've had this question I've asked people, excuse me, I most of the time end up losing subscribers or on my videos when I go back to look.
When you upload. When you upload, right?
No, when specifically the live streams. So live streams will go live, and you could look at the analytics of the live streams, and I'll see 1 or 2 people drop off. I don't know if it's my face or the way I talk.
Nah, come on, man.
Or what? But there are some. Like the most recent one I did was really well received. I didn't lose subscribers on that one, but it's interesting that most of my videos, they'll either have 0 or, some of them have up to over 100, 200 or so subscribers at this point. You probably have ones with some 10,000 or maybe, 100,000 subscribers off of some video.
We're not even remotely in the same lane, so don't worry about it.
Yeah, so, but it's just interesting. So you start talking about how you can make money by going live. I find it hard to believe, because I would make more money grinding through making 3.5 hours worth of videos than I would be doing live stream. So I'm curious.
At this moment right now, that is true for you. Here's the thing, though. Live stream content is spontaneous. It doesn't require pre-planning, pre-effort. It just happens. So the burden on you, frankly, I don't think it's very hard for you to have a conversation with someone. You seem pretty affable and pretty easy to just take things as they come, right? So, here you have random people jumping in and you're taking it in stride. So I think you have the personality for it. Now, the one thing I forgot to mention before, and I will add, is that live streaming requires a critical mass. And what I mean by that is if the channel isn't known for it or can sustain a live streaming community well, it will harm you algorithmically. And that's why many channels decide to segregate the live streams from their main content. And so you were witnessing it. Exactly. So you were witnessing it on a smaller scale. And here's the reason. Yeah, right. I would say of an audience, usually only 5% of them are actually interested in participating in a live stream as it happens. And so, and also notifications for live streams do go out more faithfully than videos, but they can be an annoyance. And that's why they trigger unsubscribes, which are dangerous. But I wouldn't worry so much about subscribers. Again, subscribers are a vestigial part of YouTube. It's like most people are driving content through their homepage, not the subscription feed. So if the algorithm knows you like a channel, even if you're not sub, they'll put the video in your home feed. In fact, sometimes they'll send you notifications for channels you're not even subscribed to. So I wouldn't worry that so much. But yeah, generally the solution people pick is that they wait until their audience is at a big enough size, a critical mass. They create highlight content. So they take the old streams and take out the interesting bits that drives interest. Mm-hmm. And I don't know, did I mention this already? They segregate it as well.
Yeah. Well, one of the things that I've been meaning to do is at this point I have probably over 20 hours of live stream content that I need to go back, and I've really only gone through one of those live streams and actually cut it up into useful sort of small clips here and there.
It takes effort. Yeah, I would outsource it if that's feasible.
That's actually a good point. But one of the things is like I have now 4 good conversations that I could easily now with these 4.
One by one. Yeah, you're thinking the right way.
And maybe not everyone wants to hear about, say, the real estate guy, but somebody might be really interested. As I'm sure a lot of the guys like Hidden Freedom Investor and Gen X Dividend Investor are loving the YouTube aspect of the things that you're bringing to the conversation right now, because I'm learning a crap ton from you. And I'm sure other people, would love to hear what Allgood was talking about, being 65 and an investor.
Yeah, I caught the end of that. That was really good. It had me hooked.
And I'm super excited. I'm super happy that I've been like bugging the crap out of her as a joke almost, but the fact that I saw her on was priceless. So, but back to your investing. So, what's your thought? I mean, I'm more curious and asking more. Honestly, I don't know what I would do in your situation. So, I mean, you're continuing to see your revenue decline. You used to be able to siphon away a decent chunk of change, but now your kind of income stream is drying up, but you still want to make sure that you're able to get investing. I mean, what's your thoughts?
Yeah, I think that's a good jumping off point. So there's like a triforker, I guess, Trident. There we go. Trident in the road. I could go full cash flow. Like, I know people rag on them, but there are some good BDCs. They cash flow well. You're kind of sacrificing growth definitely for that. Like, I mean, the year-to-day returns usually on like the ignoring tax, the 9 to 10% range. S&P does obviously above that. I could, it's risky. I could also double down on like the hyper speculative biotech stuff. Like I've had a string of wins, like mergers and acquisitions. Those often 2x, sometimes even 5x. And if you know what you're doing, it's really crazy. Don't recommend it for most people. In fact, don't copy me, don't follow me. I make YouTube videos. I don't know what I'm talking about, everyone, so don't listen to me. And then finally too is that, I guess trying to increase the income side somehow, but I definitely feel limited by my skill set.
Yeah. Interesting. Well, yeah, I mean, I honestly hope that the finance aspect thing works for you. I mean, like you said, you've done the gaming aspect, you've done a bunch of different ones, so hopefully this one's able to work, and it has a decent CPM to it as well. So you need a lot less folks, and even someone that just, I don't know if the other guys that want to chirp in, a lot of these guys just hit 1,000 subs themselves, so they probably are seeing their first couple paydays themselves. But even some of the folks that I've talked to that are at 1,200 subscribers, they're making $13, $14 per CPM, and I'm just like, that's astonishing. I mean, there's some of my videos that I've seen average like $30 a CPM.
Wow.
But
I've never seen that.
I have another stupid question for you, and then Jesus, I keep deviating from the topic of wanting to get to your portfolio and diving deep into that. But
sure.
Do you ever notice, and I'm not sure for you, do you ever notice that the first 1 or 2 days your CPM is a lot lower and then it kind of builds over time, or is that just me?
I don't track the daily CPM. Do you mean revenue or actually CPM?
CPM.
Yeah, I don't track that.
Okay, because what will end up happening is like it's $8 or $9 the first day, $12 to $13, and then it kind of builds up to either 15 or sometimes up to 20.
Yeah, here's the thing, man. I think you're an analytical guy. You dive in deep, but sometimes sometimes it's extraneous information. Even if there were a pattern to it, I mean, how much could you realistically micromanage that to see a gain?
Yeah.
Maybe you could. You're an engineer, I guess. Yeah. I don't really pay attention to that though. I care more about content strategy, how it appears, like that sort of thing, like the qualitative stuff.
No, and I think that focusing on that sort of stuff is, I don't want to say it's detrimental, but you're right. I mean, I could focus my mental capacity on things that are more important, like getting the content.
All of that, exactly. All of that is relevant at the end of the day. Is if you don't have a video hitting people's homepages, all the stats in the world aren't going to drive people to your channel. You have to have something for people to watch, and it has to be good. I think content strategy is the most important.
So I'm curious. What is your, because you were talking about the trident and then we kind of got off topic again. So your thought is, hopefully, are you trying to go all in on the finance aspect of the YouTube aspect so you can kind of get the income stream going again? Or
I could do it again, man, but you know how it is. I can tell you're out here. I hate the word hustle, but that's what people use. You're out here. I can tell you're grinding it. You're hitting it, and getting a channel started. It's like climbing Mount Everest, and I've done it already 3 or 4 times. Eventually, you get tired starting over.
For sure.
But I'm 27, right? So I probably could pivot if I retrain something, but the window on that is definitely closing. Because as you get older, you don't absorb information as well. You're not as like mentally flexible. I'm sure you know how that is.
Now I'm curious. So what's the short term plan? I mean, obviously you're going to keep trying to ride the YouTube thing, but I mean, are you going to, like you said, you could try to retrain, or so are you going to just try to hustle and get the channel up and going so you can continue to add to the portfolio? Or
I'm in the midst of all 3. I think I'll try another one. There's still a few things I can try. I could go casino mode on some of the other investments and boom my way out of it. I won't lie and say I'm not thinking about it. I won't lie. I am thinking about it. I know it's dumb, but and then, what was the other one? I don't remember. But yeah, I'm considering all 3, kind of potentially even doing all 3 at the same time. But until one yields results, I can't really say,
So what brought you originally to South Korea? Was it originally the teaching aspect of things, and then you kind of got started on YouTube, and then you kind of just...
Yeah, I guess that's more of like a life philosophy thing. So I don't teach. At the moment, I don't have any plans to do that. So when my YouTube stuff blew up, I reached the point where I was pretty comfortable and I wouldn't really have to worry. So then I became more concerned with quality of life things. And so one of my bucket list items has been to learn a language that's extremely difficult, and Korean definitely is up there. I think it's a category 3 on the I think the State Department, how they classify languages. It's one of the hardest. So I guess you can call it personal fulfillment. And I actually did decide. Everyone always says, "Oh, I didn't spend my 20s well enough. Oh, I delayed gratifications too long." I decided to make the most of my time when I was young.
Yeah, I mean, you're making decent amount of money.
It could blow up in my face someday later too. You never know.
Yeah. I mean, I think that happens to a lot of YouTubers. I mean, I was looking at Logan Paul. He's making obviously a crap ton of money from YouTube.
Yeah, he's not a good example. There are graveyards with gaming channels that had their time in the sun for a year. They got out of the workforce, and it did not end up well for them.
Yeah, so I'm sure he's but that could easily. I mean, he's bringing his way back now with the podcasts and stuff like that. But I mean, in 2017, it easily could have gone the other way, like you mentioned.
Hey, props to him, man. He's persistent, right? So he actually was on Vine originally, if you remember. Yeah. Vine died hard. What if he never came back? You know? And
there are a lot of Viners that never ended up making it.
Exactly. And every time you start over, you run that risk.
Yeah, I almost forgot about that. But he had a really good. So FouseyTube did a Cribs video with him, and he's got a pretty cool setup now because obviously he's doing podcasts. He's living content creation, which is interesting. But anyway, enough about that. I'm curious. Do you want to continue to talk about dividends or your portfolio, or there seems to be a lot of content creators in the stream that would love to continue to skyrocket back? I'm like looking, and there's stuff all the way back from like half an hour ago that people are like chirping up.
Oh, I'm sorry, I can't see the chat. If you could relay some of them, I'd be happy to answer.
Yeah, I mean, it's up to you. I'm more than happy to like let them keep building.
But actually, let's do like a series of questions at the end. I do actually want to talk about the specifics because it is possible I could more effectively manage my dividends.
Yeah. So yeah, I don't know what kind of questions you have. I'd love to answer, but I feel like I'm just like trying to think what I would do as like a declining revenue stream, trying to build a portfolio. I mean, it's interesting.
Yeah, it's down to two things. Like, so I'm not going to pretend I'm a genius and I understand how many burgers McDonald's is going to sell the next year. I mean, McDonald's, if you're to compare it to GDP, it's a small country, right? And you don't, not even a small country, actually, probably a decent sized one. I don't know what's going to happen with that. So I usually stick with ETFs. I know I'm probably losing out on probably a basis point, half a basis point on like if I were to micromanage it, but that's not for me. I'm already have my fingers in so many pies. So I feel like, I guess a 4.34% yield, that's not too bad, right?
No, it's not, especially average, because that obviously means like you mentioned, you probably have some closed-end funds, and then you got
exactly.
So in that respect, I mean, 4%. With where
take
you're
off
at,
2 for inflation, though.
Yeah, I mean, that's true, but at the moment you need the cash now, so you don't really have to worry about the inflation, right? And long term, I agree with you though. So long term growing that, I agree, you have to take off the 2%. But when you're using the cash now, you don't have to really worry about the inflation. So I don't know. I mean, you could, like you said earlier, I mean, you could definitely like go the high risk route, 8 to 10% yielding companies, and then you're going to be getting, the $1,000 a month you need from the portfolio size you have.
Yeah, I have some of a background in BDCs. In fact, I've played some of the preferreds pretty well, and you can beat people out there because the volume is so low.
But at the same time, like you said, like, and that's a strategy that I plan to deploy in my personal strategy is
amping up the cash flow.
Yeah, amp up the cash flow now because I'm young. I can take the risk. And once I get to the point where I become financially independent, it becomes more of the conservation strategy for me, whether that's, siphoning off money from the portfolio, dividend portfolio to invest in real estate or another business.
I've considered real estate as well.
Yeah, and so that's the thought is it's like, at the moment, the goal for me is to chase the financially free aspect of things. And as I get more financially free and the income continues to grow, because it will, just based off of like generally speaking, the dividend growth that I've seen over the past couple of years. Granted, it might take a dip if we have a recession in a year or two, but then it'll continue to grow as the recession kind of ends and we go back into a expansion business cycle again. But the thought would be is as I get older, more financially free, once I hit my $50,000 US a year target, that I can start backing off on the higher dividends. I think for me,
interesting. I thought it would be the opposite.
No, I mean, I wouldn't back off like completely on the dividends, but I'd be backing off on the yield. So you're saying if I become more financially free, why wouldn't I up the yield? Because I could get more risky?
No, I mean, I'm mainly factoring in your age. It actually, I know, like, that's part of why I don't do it, because I think that cash flowing now in exchange for, future gains or growth when time is on my side, I don't like that because I feel like I'm mortgaging my future.
Yeah, no, it makes, no, I can 100% understand that as well, because I think a lot of people, when they look at my portfolio, they're like, why are you investing in companies that on average are yielding you between 4 and 5%? I mean, that at someone that's 28 doesn't make sense. You'd expect me to be investing in things like Apple, Google, Amazon.
Oh, don't take me for a growth investor. I don't necessarily think you were saying that, but yeah, for me, it has to have a dividend.
Yeah.
It changes the psychology entirely.
Yeah. So, yeah, interesting enough. I mean, it's very interesting. I see the predicament that you're at, and I've had people on my channel comment before, like, why is your dividend so low? I remember specifically somebody, I'm going to mess up the words, but I have a $75,000 portfolio and I'm making more than you are in dividends, and you have, I guess the dividend.
Yeah, you could for like a year-to-date yield of like 5%. Yeah, you could. You're just cash flowing the basis. That's it.
The dividend aspect of my portfolio is like 3 times that. It's probably around 250 or so, and then I have the 401k, which I have no idea what kind of dividends come from that, but because I can't track it. But yeah, I mean, you could do that. I've heard people investing in stuff that 20% yield, and I'm just like,
highest I'd go is 10. There's some like people like to rag on BDCs, but there are some that hold up all right.
yeah, and that's why I like Main Street Capital. Actually, they invest.
Yeah, me too.
They have a pretty good business model. They look for small to medium sized companies, and they've done well, respectively, since 2012. So hopefully the success continues. But they've had good success before they went public as well. So
I actually have a question for you. This is more specific. So, are you familiar with the ETFs SPHD and SPYD?
SPHD, I know a lot of people invest in. SPYD, I don't know.
Okay, so yeah, this is. I feel like I'm insane for thinking this. I don't think SPHD is all that great. I think SPHD, it's low volatility monthly dividend. That's the appeal. I think the expense ratio is 0.2, and the yield is down by about, compared to SPYD, which pays quarterly, and they have different holdings. It's about, again, 0.2 expense ratio versus 0.7. So to me, I think SPYD, if you just have the patience of quarterly, is superior by every metric to SPHD, but I never see anyone say that. So I feel like I'm insane. So I just want you to validate. Am I on the right track here?
I'm looking here at SPHD, and I see a 0.3%.
Oh, yeah. My mistake. Yeah, it's worse than I said.
4% yield, 4.2% yield. That's interesting. So let's look up
Check out SPYD, yeah.
This is fun.
And then we should get to questions after that, because actually I probably should go in about 20 minutes or so.
Yeah, it's what, like 1 o'clock there? Or
1 p.m., but I got stuff going on.
Yeah. Why isn't this showing up? Okay, here we go. So yeah, like you said, expense ratio is down by 23 basis points, so it's 0.07, which is comparable to a lot of Vanguard.
Vanguard, exactly.
Assets under management only $2 billion compared to SPHD. How much has that got? 3.5. So SPHD is almost double. Yield is 4.42. Like you said, that makes sense. It's spread about twice as many holdings. Well, SPHD's got 51. SPYD is about 81. But yeah, let's see. So what are the top holdings? So the top 10 holdings are like Leggett & Platt, Cardinal Health, Nordstrom, Seagate, Campbell, Weyerhaeuser, CenturyLink, AbbVie, Western Union, and then SPHD. Let's see where they have their top 10. I feel like SPHD probably has less volatile top 10. No, there's some.
Look at the yeah, exactly. Yeah, look at the year-to-date returns on both of them too.
Yeah, Iron Mountain, Kimco, AT&T, Altria Group, Philip Morris, ONEOK, Western Union. So yeah, both of them have some things that I would buy individually, like the Philip Morris, Altria Group's AT&T, and then like SPYD, I would probably buy Campbell Soup and AbbVie for sure. Maybe not right now.
AbbVie, definitely.
But AbbVie when it was a little cheaper, maybe a couple months ago. But even still, I think it's a good buy. But yeah, what did you ask what the year to date is? Yeah, I'm curious now. Based on,
look which one's better.
Where's the? Can I even get?
It should show up on Yahoo Finance.
Yeah, I'm gonna pull it up on Yahoo. I'm looking on. Well, I forgot what it was. It was like ATF.com or something. Let's see. SPHD. Let's see, man. SPHD. Oh, it's actually 12:15 a.m. here. I should go to bed myself. SPHD, Yahoo Finance. Why are you taking forever? But yeah, I know a lot of people are praising SPHD. Every time I hear somebody talk, they talk about
yeah.
I don't care about SPHD is what I care about. Invesco, S&P 500. Okay. So year to date, what is it up? From 38 to 42, so just over 10%-ish or so.
It should include dividends reinvested. That's an important metric too.
That is important.
It should say on Yahoo Finance inclusive of dividends and reinvested, the YTD return.
Oh, I see what you're saying. Okay. Where does it say year to date? Let's just look at chart. Under chart? Is that what you're looking under?
It's usually just on the summary page. I mean, I can save you time. From what I see, SPYD has a superior year-to-date return as well.
SPYD change year over year. Oh, year to date totally 16. Yeah, and then
Am I missing something? I feel like no one ever says anything about this.
19, huh? Interesting.
The only difference I see, qualitatively is, well, I guess expense ratio isn't qualitatively, but that and monthly versus quarterly. And you know the fallacy of monthly versus quarterly, obviously.
Yeah. I mean, yeah, I know a lot of people that are always chasing the monthly dividend yielders, and that kind of goes back to the chicken and the egg, 8%, 10% yielders. Are you comfortable with that? And some people I originally was investing in, say, Realty Income Corp for the monthly dividend, and I found out it was actually a pretty good quality dividend payer. So I stuck.
Oh yeah, that's genuinely a good company. There's nothing inherently wrong with monthly, but it narrows your focus.
Yeah, and I think that's what it kind of blinds people, puts blinders on, like the horses that race. They can't see anything other than, say, monthly dividend players, because they did a calculation once on an Excel spreadsheet, and I understand where they're coming from, and they mean well, but anyway, yeah, really. Really interesting concepts. But yeah, I mean, SPYD, if I were to do ETF investing, that would probably be far superior. 0.3% expense ratio in this day and age is absurd. I feel for people that are doing that. I mean, I would say 3-4 years ago that was probably been acceptable, but I mean, before the zero commission sort of battle that's been going on, I mean, Vanguard and Fidelity were going back and forth and between who could get the lowest expense ratio down for their S&P 500 fund. And I remember it used to be like 0.15 or something when I first started investing in Vanguard back in the day, when I had a Vanguard when I was in high school or early college. And then it started getting to it went to 0.1, then Fidelity did the same. It was at like 0.12, then it went down to like 0.09, and they were doing the battle there before they were doing the zero commission sort of stuff as well. But
yeah, just as a headline though, would you agree with my assessment though that one seems to be better than the other, yet SPHD is the holy grail?
Yeah, I mean, just based off of the initial stuff, I'd want to dig more into the holdings that it's holding. But just on the surface, it looks like it's probably superior, but my fear is that maybe it's got potentially too much technology or something like that. But just looking at SPYD, I mean, you got Realty Income Corp, AbbVie, AT&T. I mean, those are all three companies at the moment that I invest in. So
yeah, they're solid. There definitely are. There might be a difference in the holdings. I wanted broad exposure. That's what I was interested in. I own both, by the way. But
yeah, I know a lot of people do HDV as well, which I guess is high dividend from iShares. What's that expense ratio? Now I'm curious. 0.08. Yeah,
that's good. Yeah, that's good.
A little bit lower yield though.
Yeah, yield's lower.
But this is more like
you really should only look at the year-to-date return. I mean, I reinvest anyway, so
yeah,
that's kind of more important than the yield.
Yeah, I'm with you there. But anyway, yeah. Do you want to answer some questions before?
Yeah, let's. Yeah, exactly. We can do some rapid fire, then I get going. And I appreciate you having me on.
No, I appreciate it. Hopefully, be able to talk about it a little bit more. So let's see. I'll be able to put them on the screen here. So HFI. I use big glitchy times. Okay. There's that one. So why do people do dividend investing? They don't care about the value of the portfolio. I'm curious what your thoughts are, but then more looking for some of the other ones here.
Why people say that they're using dividend investing and they don't care about the value? I never said I don't care about the value of the portfolio.
I think he was talking. I talk about.
Yeah, that's more for you, I would say.
Yeah, I personally I look for the dividends, so that's really the answer. But of course, generally speaking, they go hand in hand. Of course, if a company's lost 50% of its value, it probably also cut the dividend. So, but maybe not always. Somebody asked, are you trying to focus on your new finance channel?
No, it's not a focus. It could become one, but no, it's not a focus right now. I'm trying to resurrect the meme content one. There's still a few ways I could do that, and I think that has more potential. Right now, the finance one is just a passion project. I like the type of investing I do. I don't think has broad appeal, which is like a mixture of like boring as hell dividend ETFs and like these crazy hyper speculative biotechs. Like I just don't like. I'm a content strategy guy, and I don't see the broad appeal of that. So it's just more for my therapy because, hey, you know, I think this is true for everyone in your personal lives. As actually the previous caller was saying, there's not many people to talk about this with.
Yeah, no, 100%. Somebody, Gen X dividend investor asked, imagines that live streaming is short-term profit versus less long-term profit. How would live streams get a high view count post being
okay? He is exactly right. So usually I would say a live stream content should always be supplemental. If your primary content is live stream and that's it, what that means is you're coasting on past glories. It's a good way of cashing in on popularity that's already been built up, but I would never use it as a primary, right? So that's the problem. Like, you know about Twitch, right?
Yeah.
There are dozens, I mean, hundreds, thousands of people on there who just start streaming with no background and no reason for why anyone should watch them. And they go nowhere. The generally accepted strategy is that you build up an audience on YouTube, get people to follow you for you with pre-recorded videos, then live stream. So the person writing this is getting onto the right idea that, again, live stream should be supplemental and also for when people already like know you and take you seriously. And monetization on streams is much more effective and versatile than with YouTube videos, I would say. You get live interactivity and people place a premium on getting your attention during that live stream. So obviously, like, you know, super chat, hey, you know, like you get, I think you had some super chats this video, right? And, you know, all it takes is 2 or 3 super chats to beat a normal video. So, and also too, like, this is more qualitative, but it puts audience engagement and investment into you and your personality and your channel through the roof. Yeah. There's a lot to go in that, but I think that answered his question.
Yeah, I feel bad if there's any super chats. I'm looking at the stream through the StreamYard, so I apologize if I missed your super chat. I got one last week when I did a live stream. And,
you can see them in the dashboard if you go and look.
If you're looking on YouTube, I would assume.
Yeah, on YouTube. Yeah, under the live dashboard, you should see previous super chats. I'd hate for them to ask something or say something and then not get noticed for it.
Crap. Yeah, I should probably do that. Next time I definitely will for sure. I'm going to see. So you said under dashboard, huh?
Under the live streaming tab.
Oh, live streaming tab. Okay, let me go there.
At least under the old one. I know they changed to YouTube Studio recently.
There's videos. Oh no. Hopefully I don't lose you guys here. Computer's bugging out. That's another thing. I need a new computer. This thing is ancient at this point. Live. Whoops.
Yeah, that is another thing. Live streaming requires a good computer.
So let's see. Likes, comments. We'll go on here. Hopefully it doesn't have volume on, which it does. But you can see monetization, analytics, channel status, competitors. Maybe, is it under monetization, you think? I don't see it normally. Nah.
Give me a moment. It's usually under the live streaming tab, but actually now I do it myself and it's not there. So I'll be able to get the answer for you in probably about 30 seconds if you filibuster.
I feel bad. So yeah, how does monetization? We got that. Don't lose your money. Oh, somebody asked, why don't you sell a course on growing your channel to 1 million? Because you have that experience.
Yeah, I could. Yeah, I definitely could. I don't know if would people take that serious though if I'm at the moment on the downswing. I wonder about that.
I think you still have expertise though in terms of, I mean, I believe that you would be able to get some sort of revenue from it. I mean, granted, I mean, you're easily within probably, I would say, definitely top 10% of YouTubers in terms of being able to grow close to $1 million in multiple different channels. I would say, I think I heard a statistic that 10% of YouTubers get to 10,000 subscribers, which I thought was pretty crazy. I thought 10% was pretty high. I thought maybe it was more like 2% or 3% get to 10,000 subscribers.
It depends on the genre. So 10,000 in finance is actually pretty good. 10,000 in gaming, you're a nobody. It really depends.
Okay, that's good insight.
No, but I appreciate the kind words people are saying about that. You know, if people do believe I have expertise and I could be of help, that's definitely a good idea.
Yeah, so this gentleman says, know that you're not an expert in all the content he gives on all your channels, so where's the best place to research to get content for your videos?
He must mean like the education, or like the what does he mean, you think?
Yeah, I don't know. Hidden Freedom Investor asked then, what type of content?
I think I know what he means. Yeah. So I wrote all of the videos myself. So you can also outsource writing. You got to be really careful who you get as a writer. I got good ones on Upwork.com. I also knew someone personally from my network who had a master's degree in linguistics and obviously made a very interesting writer, made great videos. I wrote them as well. Most of them did come from me within, and I did a lot of reading when I was younger. And, you know, people have called me the walking Wikipedia. So I don't really know how necessarily you would copy that, but I know definitely you can outsource it. So just, you know, be a well-read person, learn about the world, and you'll be able to write that stuff no problem.
Interesting. And then what was it else? That's more of a comment there. So investing, people just exchanging emails here. A person talking about me having a small portfolio. People chiming in on the SPHD, SPYD conversation. Yeah, some people chiming in that they do. Let's see. Somebody else was mentioning they hate SPHD. Hidden Freedom Investing said he hates SPHD. People are chiming in that it's a monthly payer.
Yeah, I seem not to be alone on this, which is good.
Yeah. Yeah, interesting. But yeah, don't feel obligated to stay. I know you've probably been on here for more than an hour at this point, but I'm sure
actually now is the perfect time. Yeah.
Now is the perfect time, and it's almost 12:30 my time. I got to get up and get to work. But I truly appreciate you stopping by, and I definitely want to keep in touch with you. So
sure.
That's really good. I need to reach out to you. You said you don't have Facebook or Instagram?
Yeah, I'm not a social media guy.
Yeah.
I got a Twitter, and I can send you my email as well.
Okay.
And I definitely appreciate the offer and would love to do that. You even mentioned a website too before. This might surprise you, but I actually like to write a lot more than I like to make videos. I'm more of a writer.
Okay. Interesting. So do you have
FYI.
anything like that?
I want to, but my concern is that no one would read it, which you seem to be offering the solution for.
Yeah, so we can definitely talk about that as well, because Kyle and I were thinking about how we can get folks kind of channeling in and offering potential affiliate sort of talks about that as well. So that could be.
Oh shoot! I meant to ask, but I was going to ask if I could put my Twitter, but I hit enter by accident in the chat. I apologize for that.
I don't see it yet. I don't see it. It might take a minute for. Oh, there it is. Yeah, Byzantine. Okay, cool. So yeah, I think I don't have a Twitter. I'll double check. It's been a while since I've used it, but we can copy and get notes and stuff on that. But
yeah, if there's some way to privately send my email, obviously I don't want it public, but yeah, I'd be happy to.
Cool. So is there any other final closing words? I'm probably going to close the stream myself. Almost 4 hours in.
Yeah, no, you definitely have been here for the long haul, and it is I would say the ideal time for me to head out. So yeah, in summary, I took note of what you said. I think you had a good outsider's perspective. You know, the whole like YouTube, man, it really puts down on you mentally. It's
yeah,
it's hard. So like it's very valuable to me to get an outsider's perspective, and also to just talk about issues I care about. And I just really appreciated you just spontaneously allowing me on the stream. It was a good time.
Yeah, no, any time you ever want to shoot me a message or anything like that, obviously use the comment section, and then I can try to see what Twitter's all about, and we could try to figure out a way to contact each other, whether it's through WhatsApp or something like that.
If you have an email, I can email you, because I don't expect you to sign up for Twitter just because just to get an email from me.
Yeah, no, yeah, that's I'll figure out a way. I don't want people to get my
yeah, so you understand
as well. So we'll figure it out. But really appreciate you coming on, man. It's been a blast. We had a really good conversation about a whole bunch of different stuff. But curious to keep in touch and find out what ends up happening
as well.
Month after month, man.
Appreciate it.
Yeah, man.
Talk to you later.
To you guys soon. And I guess for the rest of you guys, really appreciate you guys. We had 18 people probably pretty consistently, and I saw we even got up to 25 people. In summary, just like what Toplist had mentioned, really good conversations, 4 different people, 4 different perspectives, 4 different investing strategies. Really awesome. Couldn't have imagined this going any better unless, like, I don't know, PPC Ian showed up. But I will definitely take all good as a good second place prize for that. And then obviously a phenomenal conversation with Toplist there, who has over 1 million subscribers across multiple accounts. And really curious. I mean, this is a really cool format. I personally like this format more than the previous formats where I'm kind of just rambling on for an hour. So really be curious what you guys are thinking when this video kind of gets live. Now we're getting on close to 4 hours, but I'm sure it's going to take a while to process, but please let me know. Obviously, people aren't going to really see this because it's 4 hours in, and they're probably not watching for 4 hours. But for those of you, the 19 or 20 of you, when this actually does go live and you do see it in terms of it being loaded to YouTube and you are able to leave a comment, let me know what you thought. If you haven't already, hit the like button. For those of you that did the super chats, really thank you. Hidden Freedom Investing, you're good about always doing that. I appreciate that. Apologies that in StreamYard it doesn't show that, and definitely really like this stream. That's why I went for 4 hours. Like, if I didn't like this, that's awesome. Like, the fact that I ended up having 2 people cancel out on me, and I was able to get all good of all people to show up, and then Toplist. I mean, that's awesome. 2 great people that weren't even scheduled to come on, but were fortunate enough. And there was a 3rd person that I was trying to get on there as well, and they ended up signing off, I think. And but yeah, there was somebody very early on that I was hoping would kind of come in, but awesome. I mean, I'm just flabbergasted. I couldn't have expected this to go any better. But in summary, man, like good words of wisdom by all good. You can't change someone's mindset if they don't want to do something. You can't. Talking about people that always talk about they want to invest, but then you start talking to them about it. You can't change people's minds about some of that stuff. And really interesting to catch up with Jesse and crap. Who's the first gentleman that I had? Began with John or Jeff, or I'll have to go back and look. I apologize. But he was a really good person that I want to keep in touch with as well. He is about 4 investment properties ahead of me. So I'll be glad to talk to him about investment properties if he gives me advice, or if I give him a little bit of advice or guidance or experience or my sort of thoughts on investing. So wow, really, really good live stream. I'm like flabbergasted and tired, and I feel like I don't even know what to say. I feel like I'm on top of the world. Really appreciate this. I think this is going to be my new live stream format. So really appreciate folks doing that. Maybe I'll move it to a Monday, because I just noticed that Allgood said that other folks are doing stuff on Wednesdays, Fridays, Saturdays, and I love those guys too, and I want to watch them, and I want to be in those. And I appreciate the folks that are like Gen X and Hidden Freedom Investing that normally are in those streams as well. And they were having to balance the fact that they were in multiple different streams to make sure everyone was happy. So really flabbergasted. And I apologize for, JMac running over your or not your podcast, but your live stream. Wish I had been in there. Should have thought about it. You had me on a Wednesday. I didn't know it. I did not mean it in malicious intent. It just, I was like, on a Monday, I was like, I need to try something different, and here I am. I need to figure out a time where I'm not interfering with anybody, because I love you all, and you're all part of this great financial investing community. But in the future, next time, maybe I'll be a little bit more structured, talking to people. I'm curious what people's 2020 dividend goals are. And a lot of people are starting to come out with videos on it right now. And I'm really curious. I made a video a couple months ago talking about my goals, but really curious what some of you guys, especially some of these strangers or people that don't make the YouTube content, are really all about. So next time, if you guys see it up for grabs, maybe I'll do one next Monday or Tuesday. Very similar format for those of you that want to get on. This time it was probably anywhere between half hour to 45 minutes per person that came online, which I was expecting it to be probably 40% of that. I was expecting maybe 15, 20 minutes with 5 minutes of questions in total. Ended up being a little bit longer. So really appreciate everyone sticking by. I mean, 18 people for a pretty consistent amount of time. And yeah, some really good YouTube information at the very end from Toplist, somebody that has built a pretty good business for themselves. Really curious how he does in the financial aspect of things. So cheers, guys. Awesome live stream. And any suggestions, as always, leave them down in the question box or comment section down below. Cheers. Thanks so much.